thank you everyone for coming along. This starts the start of a series of experts across Asia that we've pulled together to talk us through what's really going to be an absolute marquee event. I mean, obviously the US election, everyone's been reading up about it. It's really started to move markets, whether you're looking at reflation trade, whether everyone's sort of talking about whether Biden's going to come, we're going to see the so-called blue wave, which I'm sure Karen and I will talk about. Whether Donald Trump's got a realistic chance of staying in power and what that actually effectively means for markets and global markets, not just US markets, of course. And you know, we're really excited to speak to Karen today, Karen Foo. She's got an extensive background, you know, reading her through her bio. Best trading guru in Singapore in 2019. She's an active speaker on the speaking tour. You know, done many gigs around Malaysia, Singapore, Thailand, Vietnam. She's helped thousands and thousands of people become better at trading, find a positive expectancy, find their edge going through markets as well. She's ranked #1 in Singapore nationwide forex trading competitions. You know, I can go on, but it's pretty clear when you read her bio that Karen is an expert in her field. She's an expert FX trader and really great at managing around what we got today, which is talking about the US election. If you go to her YouTube channel, Karen has an extensive following, well over 100,000 subscribers there, and that's for a reason. So it's really great to talk to Karen today, pick her brains about how she is advising people to trade around the election, or what she's doing herself around the election, because there's a lot of people in this room who are sitting there going, what do I do? How do I trade this? Should I trade this? Should I just be out of the market altogether? Or what time frame should I use? What assets, what markets I should be looking at? So a really poignant time to get some of Asia's best traders in the mix to pick their brain. So Karen, thank you for coming along. I mean, I just want to sort of set the scene a little bit here, because there's some people out there who probably don't know who you are. Obviously, there's a lot of people who do. But just give us a little bit about your background, what you do, and how you got into trading and got to where you are right now.
Right, how I started trading is I come from a family where my parents, they are stock investors, and once in a while they also dabble into currencies and also commodities. So I was born to a family where people just invest and trade. So my parents kind of introduced me into the idea of investing and trading as a career, but they didn't really formally teach me. So, but what I see them doing, what they do every single day, they kind of ignited the thought of pursuing this career. And then the way I learned it is I went to university to pursue a degree in finance in Singapore. So I studied for a finance degree for 3 years in Singapore. And that's where I formally learned about investing, about financial markets, and I learned it properly. And also, while I was studying for my finance degree, I met a lot of investment bankers and also hedge fund traders, because once in a while I will go around Singapore and I'll get invitations to visit all these trading floors, and then I'll go there and talk to the professional traders and ask them, hey, what is the one thing that helped you become successful? But also the other way that I learned trading is also from my own mistakes, because in my first year of trading, I blew a lot of accounts. I think I blew more than 10 accounts, and a lot of people would give up when they blow accounts. But when I blow accounts, of course, I feel discouraged and maybe a little bit demoralized. But then after a few days, I'm like, you know what? I think I can learn some lessons from this. Why did I blow my account? And every single time I blow my account, I will learn a lesson. I'll write it down onto my trading journal, and then I'll remember it, because it's hard-earned money that I lost, and it's really painful. Even though it's painful, but the good thing is that it helped me become a better trader. So to answer your question in summary, I learned investing and trading through my finance degree from my parents, and also I externally I invest and learn from other mentors outside of school. Like I would buy courses and all that. So to date, until today, I've bought 20 plus courses, and I've invested more than 50,000 just to learn about trading and investing. So that's that.
Yeah, I think one of the, I just want to sort of touch on the point before we talk about what you do now for other people, because you know you've got a YouTube following and you give a lot of your advice about what you've learned and people have learned from that. One thing I just want to talk about before we get into the US election is the idea of continuous improvement. And you touched on a fantastic point that I think is so underrated by a lot of traders. And it's something that professional traders focus on all the time, which is the idea of reviewing trades, this idea of having a trading journal, going back and finding out what you've done wrong. Because, you know, if you look at your own life, you try and do more of what's working, what you enjoy, and do less of what doesn't work, right? And this idea that you're talking about going through a trading journal, I mean, when you're teaching people to trade and you're doing your courses, I mean, just how much emphasis do you put on people on improving through writing a journal and actually spending the time to review and actually find out how to become, you know, we'll find out what they're doing wrong.
So when I'm teaching, depends on what you're talking about. If it's for YouTube, I would focus maybe like 10% on talking about trading journals and trading plans. And also, if I teach my courses, it's also about the same component percentage, which is around 10%. And I realized that a lot of retail traders, they don't really like all these boring stuff, because like, who comes into trading and then be like, you know, how can I craft a proper trading plan? Like, nobody does that. Most retail traders, they come to trading, the first thought they have in their mind is, how much money can I make? And then the second question that they ask is, so what indicators would help me make the most amount of money? And these are the questions that a lot of retail traders ask, and that is one of the reasons why a lot of retail traders lose, because they focus on the wrong things. They're focusing on the 10%, which is strategy, indicators, technicals, whereas the 90% is what is more important, which is your money management, trading psychology, and also risk management.
Absolutely, 100%.
And your trading journal. Yeah, so.
Yeah, I mean, it's amazing, isn't it? You know, the whole sort of signal service is what everyone wants. But for me, what I try and teach more than anything else is the idea about, you know, how much risk you're taking on. If you know, when you can understand how much risk you're taking on, which is usually a function of volatility, you can understand how to achieve correct position sizing, and you can stay in the game. It's not just about, you know, a signal that's coming in the market. I just also wanted to just touch your brains as well, which is something that every single retail trader needs to have, and that's an edge, right? So, you know, if you look at, you know, I've seen that you've won all these awards, you've done very well in some trading competitions. You've obviously got a process and a framework that you work with and you adhere to, a trading plan or whatever you want to call it. Within that structure, what is the one thing? I mean, you probably just answered that question in itself, but you know, what is the one thing that you believe gives you your edge, that makes you, you know, consistently profitable? What is out of all the different areas, as you say, risk management, money management, entry points, managing the open trade, managing your emotions, what is the single most point that you think, you know, that this is what gives Karen Foo her trading edge?
I would say, okay, it's hard to pick between trading psychology and risk management, because without the good trading psychology, you won't be able to manage risk properly. But I would say it is more on risk management, because one thing a lot of traders, retail traders, they mess up on is they try to get rich quick. They try to grow their account fast. So when they try to do that, grow, let's say, for example, $100 account to a $5,000 account within 1 week, like this kind of promises is really common in the retail trading world. You see it on YouTube once in a while, like videos about that, like fast growth. But then if we try to grow our account like that, of course we might achieve that result in 1 month, but then our account wouldn't last long, because in order to grow our account from $100 to $5,000 within 1 week, you need to take massive risk, and you have to completely ignore your risk exposure. You have to completely ignore about things like your risk-adjusted returns, which is what professional traders look at. You have to completely ignore about things like your Sharpe ratio, about your alpha, about your beta. You completely ignore all that. You just whack and then just go all in and try to strike a jackpot. And that's why most retail traders lose. They focus on how much money they can make rather than risk management. Because if we focus on how much money we can make, the losses will not take care of itself. But if we focus on the losses, how we can manage our risk better, then the profits are going to take care of itself. So it's very important to change the mindset.
Yeah, I agree. So let's talk about the election. I just want to, before I go into this strategy, I hope everyone can see the disclaimer here that everything that I say today is not representative of my employer. It's general advice. I don't think we're going to give a huge amount of advice around this anyway, but please do not consider this to be personal advice in any capacity. This is general in nature. So if you could just take 2 seconds to read the disclaimer, that would be awesome. Okay, so Karen, we want to talk about the idea about, you've touched on there between, before I go and talk about this, you've talked about the idea between difference between retail and professional traders, and you've spent some time on the trading floors of hedge funds and investment banks. I have as well. I've worked in investment banks around big items and big events like this. But just in terms of what you've seen around a big marquee, I don't want to say the US election is a binary event. It's almost binary, but the way that we're going to get the polls staggered and we might not get the Senate result for some time makes this less of a binary event than 2016 or Brexit events and other things that people have traded around. But in terms of this is a genuine. It could be a shock to the system. It could have a genuine shock to all markets, all asset classes, and all instruments. But in terms of retail versus professional, what are the professional? What do you envisage the professional guys would be doing around this event? Do you think it's more about hedging? It's about managing that core exposure? How do you see them looking at this event and preparing their portfolios?
Okay, so as we all know, hedge funds comes in many different forms. Some focus more on high frequency trading, and some of them focus more on macro long-term trading. And let's assume that most of them are right now focused on macro long-term trading, and this is a very common strategy used by professional traders and hedge funds. So what a lot of them would do is that they would, let's say they would buy a certain currency to hedge their whole entire portfolio. Okay, so I would say that they are more focused towards hedging, and not only that, their time horizon is going to be focused more on the 1 to 3 months time horizon. So they're going to go in and use that trade to speculate, or they can hedge it, but the trading position is going to last for 1 to 3 months. And I find that what a lot of retail traders like to do is that they like to scalp the news, and it's very short-term focus. So they are focusing on the minute time frames, hourly time frames, and the economic indicators that they are focusing on are lagging behind what the professional traders are looking at. So let's say, for example, when GDP data comes out as worse than last month, they're going to trade based on that. Whereas for professional traders, they would use other economic indicators, and then they are going to predict what's going to happen to GDP 6 months before the retail traders even went in. So by the time the retail traders went in, they'll be trading against professional traders. So to answer your question in summary, the difference between pro traders and retail traders is the time horizon and also the economic indicators that they look at. So yeah.
Well, I just need to apologise for a couple of people. Apparently the pitch is not so great, so it's probably a bit late in this to fix it up. So hopefully we can still work with this, and you can still make out Karen and myself, and you can see the slides. But I'm not sure what the issue is. It's probably not the system, but it's probably not your platform either. But so I apologise if the quality is not overly brilliant. But we'll continue. Like, what I just want to say, sorry, Karen.
Is it lagging?
I think apparently it's not lagging, but the quality of the picture is not great according to a couple of people. So apologies for that. But, hopefully we can the sounds I can you can make the I want to sort of touch on this slide here because this is not my political view, but I just wanted to set the scene. So at the top half you can see the expectations, and I've pulled together and aggregated some of the sort of more watched people out there. 538, which is a website, they run a simulation, 40,000 simulations looking at state elections, and 88% of the time of those 40,000 simulations, Biden will win. That doesn't mean Trump's guaranteed to lose. I mean, there's a lot of people out there who also talk at changes in demographics. People talking about the registration numbers that have been coming out there. The whole reason why Trump could still win this one, but 538 have got an 88%, or Biden winning 88% of the time. Super forecast, which you can go to goodjudgment.com, had Biden at 84%. You go to the polls, the average polls has a decent lead for Biden. And then you can go to the betting markets, and you can see Betfair has 67%. The House will go to the Democrats. I have no doubt whatsoever about that. I think the Democrats need to win 4 of 31 toss-up states to win that. But I think the one I think everyone should be watching is the Senate. So the Senate, at the moment, the market is saying that the Democrats will probably just about get that one. I'm not so sure. But if we're going to get fiscal going through the market, which of course is one of the big talking points, you're going to need to see Biden. You need to see you're going to need to see unity between in Congress effectively. So if you look at the betting markets and polls, and I know everyone sort of says you look at 2016, the market at the moment is suggesting that Biden's going to win. House is going to go to Democrats, and the Senate is going to go to Democrats as well, though I'm not so sure about that. That's not my view. This is just what you can get, and I've aggregated it from those factors. So please don't think that's my political view by any means whatsoever. But Karen, I know you're not a political commentator like myself, like I'm not either, to be honest. But what are you seeing? What's your overall feel about the election at the moment? How is this all shaping up? What are the sort of debates that you think people should be watching here?
Which debate you should be watching? I would say if you are looking for the more interesting ones, would be the final debate. Whereas if you are looking for the less interesting ones, it would be the previous ones. But I would say that the final debate gives you a lot of context about the different policies that the different candidates they are going to focus on, and with the patience to go through it, then feel free to go through the final debate. But if you don't have, then it's fine to just go through the summary of there are many videos on YouTube that you can check it out. So expect a lot of volatility when it comes to the elections, especially 1 week before, which is right now. And even right now, you can see that S&P 500, it is acting pretty much the same way as compared to 2016 if you just look at the charts. And also if you look at the various currencies, they are also behaving kind of the same way as 2016 election, even though we have a different backstory this year, which is the pandemic. So we are going to look into the stock market later on once we go to the charts.
Yeah, we can do that. I just want to have you got any, I mean, I think in one of the videos that you recently talked about, it was about the idea of understanding about expectations. So we've talked about what's expected in this sort of forecasting matrix. But if we were to see a situation where Biden gets the White House and we see the Democrats getting control of both the House and also the Senate, how do you think markets will react to that? What sort of markets would you be looking for to trade above other markets there if we were to see this so-called blue wave play through? You got any views on that?
Okay, as a start, the markets you should look at are currencies, in particularly the high yield and also low yield currencies. You can benefit in currencies in terms of capital appreciation and also depreciation if you are short selling, and also with the rollover carry trading, there's potential there too. And aside from that, you can look at the dollar in particular. That is the most important one. And of course, S&P 500, Dow Jones, or the stock market indices, and also the stock market sectors that you should focus on, because as we know, if a Democrat win, we are going to have certain sectors benefit, and when it's a Republican win, we are going to have another group of different sectors benefiting from it. And when it comes to commodities, we should of course look at gold, and particularly oil, which I'm going to talk about more later on.
Okay, so for me, I think what's a really interesting situation is you know, the idea that if we go back to 2016, you know, if I said to you 2 days before the election, Karen, Donald Trump's going to win the election, and you said, no, he's not. He's not going to win the election. And I said, no, he is. I know that for a fact. The interesting dynamic that I think is that most people would have, some people got it right. Some people said Donald Trump was going to win. A lot of people didn't. It was very much out of the consensus. But I think the idea that if you'd known the outcome, would you have made money? And you know, people would have gone structurally short. They would have gone short S&P. They would have gone probably short dollar yen, dollar Swiss, as you talked about the funding currencies there. They would have probably bought gold. They would have gone long US treasuries, and that trade would have worked very, very well on the initial result when we got Donald Trump winning the White House and actually getting both chambers of Congress. That trade would have done very well. You know, you would have made money for a brief period of time until he got up on stage and started speaking and sounding presidential and talking about Trumpflation and various factors. And then we saw, you know, the dollar rally. We saw US Treasury sell off, and the S&P rallied about 40% over the next 2 years. So if you had woke up after putting on these short trades, and in the US, you would have said, "Oh, I'm out. I've lost money." So you would have known the result, but you would have got the market reaction wrong. And that's what makes me, you know, look at an election like this. And I look at this right now, and I say to you, Karen, yeah, if I told you the result right now, would you be able to make money from the election? And I still don't believe that most people would be able to make money, because you're trading against news headlines. You know, we don't know how this is all going to go out. You know, so what do you say? Have you got any reaction to that? I mean, do you think that's just? I mean, obviously, you will guarantee to make money if you're going to go and trade, go and put money on a fixed odds bet, for example. But do you think that's a really bizarre concept that even if I told you the results of the election, that you could still lose money in the market because you're up against liquidity, higher up frequency algorithms, the market reaction might not be the right reaction? You know, in your experience, you know, how profound is that statement?
If you have told me the results, it depends on whether this result, is it known publicly to people, or is it just a so-called private information that's shared?
So if I knew the result now, but no one else did, and I told you, do you think you could guarantee to make money? I'm not so sure people could, but yeah, how do you feel about that?
I would say the probability will be higher if this information is only known between us, because otherwise, if it's known by every single person in this world, then it will be priced in, and the opportunity will not be there to make money. So.
No, I mean, I think, for example, if we were to see a Democrat clean sweep, for example, you know, I could make the argument right here, right now, that would be significantly bearish or negative for the US dollar, because we're going to add to the deficit. We're going to see real yields trade lower, and you know, taxation is going to go up, and various factors which is going to lower the US's competitive. But I can also make an argument that the dollar would rally, because, you know, the US is going to look so much better than everywhere else in the world, especially in Europe, with this, you know, upcoming pandemic, which will cause massive inflows into the dollar. So I might know the result. I don't know how markets are necessarily going to trade on the back of that situation. So yeah, I mean, I think it's a really interesting one. I want to go and bring up the chart on oil. And oil is something that is really important here. So if I bring up, what sort of time frames do you really look at when you start off? You start off weekly? Is you a daily person? How do you look at this?
Normally, I look at daily, 4 hourly, and sometimes weekly. But for commodities, I look at daily. Yep.
Yeah, I mean, if I look at the oil chart at the moment, I see a situation where it's moving sideways. I think the oil companies are more interesting as a play there rather than the actual crude price. But yeah, let's say we see Trump getting in at the White House, for example, and obviously that's not necessarily priced in. I think markets have gone some way to pricing a Biden victory. How would you play the oil market? How do you think it would react, either through oil companies or through the crude price itself?
Okay, because Trump, his so-called main promise is he's going to focus more on the oil market, oil industry, whereas Biden, he's more geared towards the clean energy industry. So
yeah,
just with that thought alone, when there's a Trump win, then common sense tells us that, okay, it's going to benefit the oil industry more as compared to a Biden win. But on the other hand, because this year's election is a little bit different as compared to previous elections. I mean, all elections are different because this year we have the pandemic as the backstory. So the thing is, because Biden is pro mask wearing, if that's even a word, he's pro mask wearing, and he's focusing on taking care of this pandemic. So because we have pandemic as the backstory, and if he's able to bring the cases down, if he's able to take care of this pandemic, then automatically the economy is going to recover. So this would also lead to the oil industry to improve in the long term. It might go down in the short term on a Biden win, but in the long term, if he's able to solve the pandemic issue, then we can see oil prices going up. And with Trump, we also see that he has a promise that, okay, he's going to have a vaccine coming up in the next few weeks. He said in the final debate, I don't know whether it is guaranteed. He said he won't guarantee that, but he says that, all right, we have these few potential companies that are going to have the vaccine out, and potentially we would have maybe Johnson and Johnson, that's what he said, and also Pfizer, these few potential companies. And if he's able to really deliver that promise of having a vaccine, then also you see oil prices going up in the long term. But in the short term, we will see oil prices going up highly likely on Trump's win. So that's that.
Yeah, no, I think you're absolutely right. In fact, to be honest, I think I think the key one is Florida. If he can get Florida, which is looking like he's now just about favourite, then all eyes go on to Pennsylvania. If he can win Pennsylvania, then he's got a pretty good chance. And the markets aren't expecting that, but you'll see volatility around that situation if we can get those two states, because they carry quite a lot of high electoral college votes. And I agree. I think oil is one of the things. If you look at the alternative energy index, it's rallied very strongly because of the clean energy bill that you spoke about. But I think one of the easiest trades. I talked about the idea that a Biden win I can make an argument either way for the dollar, for the US dollar. But I think it's pretty clear cut for me what's going to happen with oil. And I think you've raised a really great point. I think whether you're looking at WTI, which will probably start trading above these highs, around these kind of levels into $43. But Exxon, Chevron, trade on 95. I think these are the sort of names that will do very, very, very well. I think if Trump gets, especially if we get Republicans taking the Senate as well. I want to touch your view on the S&P 500 or US 500. We're sort of trading. We've got this sort of 20-day high and low in this chart here. I'm not sure if you can see that, Karen, but we're sort of trading mid-range at the moment between sort of 3,600, 3,200. We're sort of trading in that sideways channel. Once you get past the election, we've got a couple of questions, talking about the long term. And how do you feel about the long term? You touched on the vaccine. You talked about, some of the other factors that are going through. Once the election's out the way and we've got the known, how do you feel about the prospects of US equities, global equities more broadly? Do you sit in the camp that we've got more upside or downside, or we're just trading the short-term range?
It depends on whether you're a short-term trader or a long-term trader. So let's talk in terms of the fact that you're a short-term trader. So what you can do is that you realize that 1 week before the stock market, which 1 week before stock market, I mean 1 week before the election, which is quite similar to 2016. Like I said, you see the stock market down and a VIX spike. So if you look at the VIX chart, we actually, the last time we had a VIX spike was September, I think around there, that time. And because VIX spiked above 30, all the way above 30, as of now, it's still above 30. Then that's why one of the reasons, one of the causes of that is you see the stock market going down a little bit. And this also happened in 2016. 1 week before the election, the stock market went down. So if you're a short-term trader, you can look for a short-term short sell trade. But of course, short selling stocks is a little bit risky. So make sure you know what you're doing before you do that. But of course, in the long term, we will see stock market rally for both Trump and Biden win. Just that the degree of rally would be different. So if there's a Trump win, because his promise is his focus is more on the stock market, then potentially we would have the stock market rally more as compared to a Biden win. With a Biden win, of course, we will still see stock market rally, but it probably won't rally that much as compared to a Trump win. So either way, stock market is gonna go up. It's just a matter of how much it will go up. And again, we have the pandemic as a backstory, so we need to always keep this in mind. If Biden is able to resolve the pandemic issue, potentially you might even see stock market go up more as compared to a Trump win, because Trump is not that like pro mask wearing, and he don't really actively tackle the pandemic issue. So this kind of affects the economy as well, even though he is incorporating things like tax cuts, but the backstory is still the pandemic, which affected the economy a lot. So you can say that for this year, the elections kind of is taking a back seat, because what is really driving the fundamentals this year, I would say, is the pandemic issue rather than the elections. Of course, the elections is going to cause a movement, massive volatility in the short term, but I guess in the long term, it's still the pandemic that is most important.
I think you're right, and I think that you've got to go on Europe and some of the volatility we've been seeing in the DAX, for example, which I don't know if you can see a chart there, that's been underperforming. But obviously they've got a new wave now where they're having lockdowns. The bar under Trump for lockdowns obviously a lot higher than under a Biden presidency, but in Europe now you're seeing France going to lockdown, Ireland's in full lockdown, doing what we're doing in Melbourne, and obviously that's going to impact economics, and I think that's impacting European assets as well. So I think you're right, talking about that pandemic side of things as well. But we're wrapping up this view, and I also do agree with your longer term view that regardless of who's in power, you're going to see over a longer period of time markets going higher. It's just different degrees. I think I thoroughly agree with that view. If you look at copper and industrial metals, that they're telling you that longer term they see an economic recovery coming through, and I think the vaccine helps that situation out. But just leave you on one final point, as someone who might look at the market as a longer term situation, should people be? I know you talked about longer term bullish outlook, but what's your one piece of advice for people who have got exposures for the market and they are worried? Should they close out positions? Should they look at hedging structures? If they're longer term, but they've got positions but they are worried about the election, what advice would you give those people?
I mean, everybody is worried about. Everybody is having some form of anxiety and worry about the elections, and this shows in the VIX, because when VIX spikes, it tells us that people are anxious, people are uncertain, and that's why you also see the stock market drop. But as a trader, as a retail trader, I assume most of the people watching are retail traders. If you don't know what you are doing, try not to predict what the election results is going to be like. In fact, I would prefer that you go on a long-term basis, look at the long-term impact of the aftermath of the election and look at the policies of the different candidates, how it's going to impact markets in the long term. I would say that is a simpler way of approaching the elections rather than trying to scalp the short-term movements of the election results, which is going to get a lot of people stopped out because, as we all know, that the volatility is going to be massive. But in the long term, if we use it to hedge or speculate long term, the probability of making money would be higher as compared to if you are to scalp, unless you're telling me that you are really experienced in scalping the news, then feel free to do that. But I would say this is more of a experienced trader approach. Okay, if you're a beginner trader and you're uncertain, then you look to trade in the long term and use it to hedge your portfolio.
Yeah. And I agree as well. I mean, I think it's a very difficult play. You know, I trade myself off 4-hour charts and daily charts, and you know what you're going to get is these kind of breaking news headlines, which is going to cause big volatility. Liquidity is going to be a major issue. You know, the liquidity providers, the market makers are going to put less flow through the market, and you're going to see more whippy conditions. And you just got to be able to contend with that situation. You've got to be able to contend with moves that can go up and down very, very erratically. Of course, I think you make a great point there. You know, the idea of stops. I don't know if you use stop losses yourself, but for me, when you've got a stop loss in the trade and you've got whippy price action that's reacting to news, you know, you're just going to give just going to pay spread getting in and out of position, which is great for brokers. But it's not great for clients. You know, so I think the ability to actually trade these market conditions, they're very different from normal trading in this situation as well. There's a couple of questions here. I'll read them out, Karen. For the last couple of months, the market has been acting as if Trump will win. I'm not sure if that's true, but maybe right. Do you think there's any kind of set up a buy the rumor, sell the fact type situation playing through for either candidate? So let's put this question into perspective. I think the market's been setting up for a Biden win. But do you think we could get a buy the rumor, sell the fact if Biden does come in?
What I see based on the past few months, the market's more pricing in a Biden win rather than a Trump win, which I agree with you on that. But one thing I need to point out is that also it's very important to not use the stock market or any other markets to predict the election results, because based on what we see 4 years ago, surprises can happen, because everybody expected a Clinton win 4 years ago, but then surprise, we have a Trump win. So of course you can use stock market as a so-called leading indicator to tell you who is going to win, but that is not a good strategy. Like I said just now, a better strategy for all beginners is to trade the post-election long-term trend rather than trying to predict, okay, who is going to win, and then try to scalp the short-term results. That is going to cause a lot of people to lose money. So try not.
One of the pairs that we talked about, obviously currencies, was the dollar. And if I look at dollar yen, I think that's a really interesting one, because obviously you've got two safe haven currencies pushed together, dollar yen there. But if I look at dollar yen, we're coming right into these lows around sort of 104.10. This has been a great level of support, even if we go further back, and especially if you put it on a weekly chart, for example, you can see this massive level of support around sort of 104 or 104.60. I think if this sort of breaks, it looks to crack. As someone who looks at swing trades and various factors, I mean, if you were looking at this chart right now, what would be your approach, given that you've got news and you might want to wait till the news is going over? How would you be looking at dollar yen, for example, right now. How would you look at trade this? Would you wait for it to be over, or would you just say, you know, it's price actions telling me that this could be going lower?
Of course, anything can happen. It could break this apart and then go lower if there's Biden win, right? This is going to go lower, provided it's not priced in yet. And if there's a Trump win, then potentially we might see it bouncing off from this support, also provided that it's not priced in yet. But with that said, when we have a Biden win, you would see dollar selling off and then capital being put into the safe haven, which is yen. So the probability of the price breaking the support would be higher, right? Because if you are to compare the safe haven status between dollar and yen, I would say that yen is more of a so-called has a higher safe haven status as compared to dollar, because yes, dollar is still a safe haven, but after 2008, people kind of lost confidence on the strength of the US dollar as a safe haven. But it still is, but just not as strong as compared to 12 years ago. So that's my thought.
I tend to agree. I mean, I think in the most part, the yen is still the preferred safe haven until you get to a period like this, when, if you can see just here, this period from the sort of 3rd of March, where everyone wanted hold of dollars, when we saw extreme volatility coming through the market, and of course then everyone just said, you know, we want the world's global reserve currency to come through, and that's when everyone went, yeah, actually, you know what, we need dollars, and then the Fed set up swap lines around the world and various factors. So I think in normal times, like we're seeing right now, if you were to see a sort of risk-off event and a sort of drawdown in financial conditions, I agree. I think the yen and the Swiss franc are pretty good buying to hedge yourself against that situation. But in extreme volatility, like we saw in February, March, then yeah, I think for me, the dollar's the place to be, because everyone wants hold of the world's reserve currency. But I tend to agree, in this volatility regime, the yen is probably the place to go at the moment. I want to talk about another area which we're getting a couple of questions on, Karen, which is tech. I don't know if you have a view. This is probably not something that you're you know, you've looked at very closely. So, you know, obviously, if you can't give an answer, that's okay. Under a Biden regime, you know, he's talked about taking on tech, or, you know, looking at tech and in a sort of a certain capacity. Some of the hard left members, such as Elizabeth Warren and Bernie Sanders, really want to bring it to tech. So again, you know, this could be an interesting one. You know, if Trump remains in power, we see the Republicans continue to hold the Senate, you know, you could see a relief rally because of the status quo type situation. But yeah, I've got a chart of the NASDAQ here. What's your view on US tech? Because I mean, when it comes to indices at the moment, in terms of index trading, we do see a lot of flow in the tech. People like the sort of the higher moves that you get from tech. Do you have a view if Biden was to win? You know, would you be looking at the NASDAQ? Would you be looking at individual stocks like Amazon? Oh, sorry, not Amazon, and like Apple. You know, those kind of companies that are, you know, massive weightings within this market. How do you feel about tech under the election?
Okay, the thing about tech stocks is that, okay, Biden he don't really mention too much about his focus on tech stocks, but if you look at S&P 500, the components of it comprises of a few significant tech stocks. For example, the big companies like Apple, you have Google, and then you have Facebook. And of course, the best time to buy all these companies is end of March this year, at the end of March this year. But when you see a Biden win, you should focus more on the areas in which he is also focusing on. For example, the solar stocks. The solar stocks is something that you can look into, and also consumer staple stocks. All these two industries, these two sectors is going to benefit from it. And also, if you are somebody who short sell stocks, what you can take advantage of is the fact that when we have a Biden win, you would potentially see pharmaceutical stocks going down, all right, and also you will see the energy stocks going down, so you can potentially short sell on those. For tech stock, I would say it is a little bit more neutral because he don't really mention too much about that. So because his focus is a lot more on the clean energy and also creating jobs, a lot of jobs for the energy industry. This is something you should focus on. And because a lot of the stocks in the S&P 500 are tech stocks, the major tech stocks. So S&P 500 in the long term is going to go up. And the thing is, since Biden promises that, okay, the clean energy industry is going to produce a lot more jobs as compared to Trump's focus on the oil industry, again, this is another reason that S&P 500 is going to rally more as compared to a Trump win. So you can even argue it that way, that the clean energy industry is going to create more jobs than Trump win in terms of the clean energy sector growth in the past few years. So that's why
it's a great wrap. I think you've in that last bit, you've really given a good overview about how you feel. So, you know, market's going up regardless. You're going to get some short-term noise, but you're pretty bullish on US equities, whether that's Nasdaq, Dow, S&P longer term. You've talked about the idea about trading oil markets and oil stocks, clean energy stocks under different regimes around that, long and short. So I think that gives a really good little summary, and a good little tidbit for people to sort of ride that short-termism. We're going to wrap it up because we've come to the end of that. There's a load of other questions, but just for the sake of time, I think what's really good, Karen, if people want to get in touch with you, we'll be sending out a recording of the video to everyone who's registered. We'll also be sending out Karen's contact details. But have you got anything, any messages around, for how you prefer people, if they've got messages, how they'd like to get in touch with you, whether, subscribe to your YouTube channel, reach out via Twitter, how do you, if people got questions around what you've just been talking about, how would you like to communicate that?
Okay, if you have questions for me, you can drop me an email at karen-foo.com. So that is my email. I don't know if I can show it somewhere.
It's okay, yeah. We'll put all the details of getting in touch with Karen on the email that we send out to everyone. So just keep an eye on that situation. And we'll make sure that if you've got any questions around anything Karen said today, some of her views, some of the educational components there, then absolutely get in touch. Do subscribe to Karen's YouTube channel. You just type in the name and you'll be able to find there's a whole heap of excellent education on there for people to look at. But thank you, Karen. It's been really, really great to pick your brain, to spin some nuggets of wisdom, which I'm sure everyone will really benefit from as well. Have you got any kind of parting words that you'd like to give out to people who are trading around the election?
All right, parting words. I would say that this year there are way too many stock investors or traders. They jump into the stock market in an attempt to get rich quick. And aside from the pandemic that we have, we also have this thing called the get rich quick pandemic this year. There are so many stock traders who jump into the market without even knowing what they are doing. They never took the time to learn about the stock market. They just go into the stock market to gamble. And we see that a lot of times this year, especially if you look at the news. Certain platforms, you see a surge, massive surge in stock traders, especially millennial. I don't know why millennial stock traders and also millennial currency traders who attempt to come into here to make quick bucks. If you pursue get rich quick in this market, what's going to happen is you're going to get poor quick instead. So to prevent that from happening, to prevent disaster from happening, please take the time, put in the patience to learn stock market properly, learn currency market properly. It's going to pay off It doesn't matter if you take 6 months, then so be it. The professional traders take at least 3 years just to learn trading and investing properly. All right. So if it takes you 3 years, then so be it. If it takes you 4 or 5 years, then so be it. Because if you are willing to put in the patience and hard work, then eventually it is going to pay off in the long term. But if you pursue shortcuts and get rich quick schemes, it's just going to cause you a lot of stress and it's going to cause you to lose money. So one very important thing, be patient, be willing to put in the hard work, and you're going to go far in this industry.
That's sound advice. Yeah, I mean, I think the best clients that we see are those who've been trading in a sort of 3 to 5 year bucket. People who've been trading and got past that first year, and they're the guys who've got a strategy, a positive expectancy, and they found their edge, which of course is what we're all trying to do. But Karen, I just want to thank you, ever so much for giving up your time today. It's been some great insights there, and I hope everyone really stands to benefit from from that outlook, and hopefully you're on the money, because I tend to agree with you as well in most of those situations. So thanks everyone for coming along, and thanks everyone for joining. As I said, we'll send out Karen's details, and we'll send out a recording for those for if you want to watch it again. So thanks for your time. Thanks, Karen.
All right. Thank you, Chris. Thanks for having me.
Okay, I'm gonna commence proceedings. We've got 1 minute to go, but we might as well continue. I'm just going to, before I start and introduce Binni Ong to you guys, just going to give you a quick overview on the compliance angle of today's webinar and the webinars going forward. There is going to be some views being said, some education. There's going to be a lot of talk about what how traders can navigate the election and other risks that are very prevalent in the markets. Please do consider them to be general advice only in nature. They do not represent my employer. They should not be taken as personal advice. Please do not consider any views that we say around the market as a personal advice. They are all general in nature, and just so the disclaimer is coming through. But today, we've got a series of speakers. There's been for people who saw Karen Foo, there has been a bit of a gap due to scheduling, but now we've got a series of experts across the Asian region. Binni Adam Khoo, Jackie Fung, and Dan Lok as well. And it's a really poignant time in this markets. We've got the US election coming up next week. It's potentially a major volatility event. It may not be, and getting the times is going to be very difficult. And trading is a very tough exercise as well. I mean, there's other things in the market that we'll be discussing, such as the pandemic, and that's really hitting European markets as we speak. But getting a series of experts to go over their trading philosophy, their trading strategy, I think is a really great time at the moment. Hopefully we'll give you guys some really good insights as to how you can navigate markets as well. So I'm going to bring in Binni Ong into the conversation as to start the night proceedings, or the afternoon proceedings for you guys out in Singapore. I've known Binni personally on a personal level. We've worked together on numerous exercises for about a decade now. I've been a big fan of Binni's work. She has a great statistical, slightly mathematical approach. I mean, Binni's been trading for a number of years. She's been providing education to both institutional and also to retail clients for about 15 years as well. She trades, and her sort of methodology and her education covers equities, FX, commodities as well. Some of the big markets that we trade here at Pepperstone. Binni's got a master's in business. As I said there, she's got a very strong background in quantitative methods and statistical skills, which I think gives her an edge as well. Binni's been asked to speak at numerous conferences, speaking with BNP Paribas, Lim & Tan, CIMB Securities, Phillips Futures, Singapore Exchange, the list can keep going on as well. Binni's also on the Singapore Academy and as a trainer there for equities and derivative products. So obviously a fantastic pedigree, and hence why we've asked her to come on today, and hopefully she's going to depart some much needed knowledge on to you guys as well. So Binni, welcome to the webinar. we're going to spend the next half an hour discussing the US election and other factors and how you personally are navigating these markets and your strategy in there as well. So welcome to the webinar.
Thanks, Chris.
That's my pleasure, my pleasure. But look, you know, let's just take a step back here, Binni. 2020, we all know it's been an absolutely crazy year. I mean, starting, you know, from the volatility we saw in February to the you know, the sharp rally in a lot of the risk assets, you know, in those lows coming through in March, and it's been, you know, we're sort of plateauing now in things like the S&P, you know, in global equity markets. The dollar has sort of abated its downtrend, gold sort of moving sideways, so is oil. And we're sort of in this holding pattern. You know, talk to me about 2020 and the sort of things that you guys have really had to sort of encompass. And, you know, how's the year been for you so far? What lessons have you learned?
Well, thanks, Chris, for the invitation. I think that today I like to share one of the very important trade that I did. Just to let you know my craze, or rather on gold. So that's gold, the shiny metal. And later I'm going to talk about gold. But earlier this year, what happened is that we saw, because of the pandemic, because of the COVID happening, gold was as well being trashed down. What we observed last year in December was that where the US indexes went up, gold went up as well. Okay, so that shouldn't be the usual behavior, but we saw that coming. We saw that, and then when gold happened to be trashed down, you know, we were very bullish on gold. So in about February or March, we saw an opportunity, and that's very close to what we are using as a method. So we went long, very much long in gold at about 1,500, 1,600, and that did us very well. We traded all the way until about 2,000, and both invested both with gold bars, with the derivatives, with the options, and with almost any instrument. So that's one of the very fantastic trade that we had, right? That's good. Yeah.
Yeah, I was going to say, what's the bet? You know, what's been the biggest? You know, what's been the best trades for you out of this? I mean, there's been a lot of people who've done, you know, pretty well, but you run more of a systematic strategy. We'll talk a little bit. We'll go into your strategy because I think everyone wants to understand more about what you do. But just give us a background about what you guys do over there, and you know, your methodology, and you know what it is, you know, the core products that you offer.
Yeah, I think later I will be showcasing the method we are using, but let me just briefly mention that first, that we assume that the market is very efficient, all right? Highly efficient in the way that the market will know where the main direction that it's going. All right, and you have to understand that because with technology, with a lot of algos, and with their fantastic risk management, they are able to position very well for many big moves. All right. However, the market participants, they are also highly emotional. So because of that, they are highly emotional. Price tends to be overdone, moved in a very dramatic manner that allows us to have some opportunity. And because of this, we often see that there's a lot of fake move. Okay, fake move in a way that market overreacted to certain piece of narrative, and I call that narrative because that isn't something that's important. It's probably just a narrative by the news, or narrative being given by some key events. Right? Because of this narrative, we are able to find a gap in the opportunity, and we traded especially on what we call fake move. Right? So this fake move can be used to trip stops. This fake move can be used to create some artificial movement, but then we mainly use what we call a washed behavior in the market, followed by rinse behavior, and we trade that. And that's exactly what I'm going to talk about, not about the election, and about that potentially we might have a fake move in the market after election, or maybe during election.
Cool. Well, what I think was a really good way to do, because I think everyone's sitting there going, like, let's actually see this in practice. I'm just going to go over this slide here, which you can see. Hopefully you can see the election dynamic playing through. Can you see the chart that says election dynamic, or is my screen frozen?
Yeah, I can see.
You can see the election dynamic there.
Yeah.
Okay, so just give you a bit of background before we go, and they're just setting the scene, and we'll talk about expectations versus reality shortly. But what you can see here is this is nothing. This is not a political view. This is just me aggregating a series of polls and pollsters and betting markets to understand, you know, who's likely to become, who's expected to become president, who's likely to take control of the House and also for the Senate. And you can see here that in this top panel here, 538, which is a website which, you know, a lot of people do follow, including sell-side banks and buy-side banks, and they'll look at this as probability. These guys run a Monte Carlo simulation, so they get 40,000 different, you know, simulations, different events, and they randomize out. There is a discretionary element in that, but in 88% of circumstances, they've got Joe Biden winning that election. Super forecaster, 84% of times they've got a chance there. Real clear, they think that they're going to get 340 seats on a no toss-up model. You know, you need 270 electoral college seats to win the election. A lot of people disagree and think Trump's got a much better chance because of changes in demographics, because of you know, what we've seen in registration counts, and there's other factors as well, not to mention, you know, 2016. But according to these models, that Biden's got a very good chance of winning here. Even the betting markets are about 2 and 3 chances here of making that. If you don't believe that, you can go and bet on Trump and get some pretty good odds. The House looks like it's going to go to Democrats. That's pretty obvious. And the Senate, don't forget that the Senate. The Senate's absolutely key for me. If we are going to pass fiscal measures going forward, you're going to need to see it being passed through both chambers of Congress, being the House and the Senate. At the moment, the market believes that there's a pretty good chance that they're going to get, the Democrats are going to get that. I'm not so sure. I think the Republicans will myself, and we're going to get a split chamber. But that's setting the scene, that the market believes this so-called blue wave, which is Biden, the White House, the House going to Democrats, and also the Democrats getting the Senate, so they have all 3 chambers, is about a 57% chance. So that obviously has huge implications for markets there as well. A lot of people disagree with that. Fine, go and bet on that. But I think that just sets the scene. Trump's in there, but you know, obviously the market has gone some way to discounting that. So that's just giving the scene, and we'll go through the permutations of what this means, given those expectations in the market. What I'm going to do now, Binni, is I'm going to make you a presenter. You should see a thing grabbed there. So let's bring up your charts, because now that we've got the sort of understanding of what's expected, the odds, the probabilities, and those various factors, let's see what your models are suggesting. So maybe you can first of all give us a run through. I'm sure there's a lot of people out here who really have never really got into algorithmic trading or systematic trading, running an EA on MT4 or MT5, and really want to see how you guys do it. So why don't you give us an overview about your system that you run there?
All right, Chris, thanks a lot. Let me just show my slides here. I'm just going to talk on the presumption about the outcome of the US election. So that's going to be a quick one. Then I will run through the alien wash. What is it about? Which is what I'm talking about. In case that it doesn't come as predicted, then what can we do about it? And at the end of the day, I think that all of you can go and download for a trial version, a demo version of the alien wash, and you can see it for yourself and use it next week in case there should be a fake move. All right, so number one, we have what you've shown as the statistics, which is basically to predict that Biden might win, and it could be a clean sweep, all right, as what the betting site is showing, as what a lot of analysts are predicting. So therefore, outcome number one, the US presidential election, it might trade as it is. Well, if it's trade as it is, then it's basically moving according to what is moving right now. Okay, we are seeing, for example, US dollar heading down. We are seeing, the indexes also temporarily coming down for a while, because then Biden might not be too good, perceived as good for the indexes. Okay, now one thing I want to bring up as a question is that the market will not be that simple. If it's going to trade as it as it is and it's so clear and obvious, then experience tell me that there's a high chance that there might be a failure. All right, failure means that if we're gonna have the Biden as being the president, and we're gonna have the the blue wave, a clean sweep. All right, then if it's gonna trade as it is, there could be that the market has already priced in that already. Okay, if this is the case, later I will show you that if that has already been priced in, then we might have a flip in all the themes that we are trading right now. Okay, so that's number one scenario. Number two is that what if the ball is round? Okay, we know that for election the ball can be round, right? What if it is not going to go through as predicted, meaning that Trump is going to win? We saw in 2016 Hillary had the popular vote, right? But Trump ultimately won the college vote, right? So Trump became the president. So the market was a little bit shocked. So there was quite a wild movement. There was volatility. And what if this time round the ball is round again? So I'm just going to work on this assumption. I'm talking about solutions, meaning that, for example, if things are really going to happen where the ball is round, Trump is going to win, then what can we do? All right. Next is that I think that there could be and there might be what we call delay effect, meaning that it's going to trade as it is, but the effect is not going to come right through with the US presidential election, because right now we are talking about the stimulus, right? And then if that's like what you said, you think that there might not be a easy win for the Senate seats, right? And what if there's going to be a delayed effect? All right, delayed effect means that it's probably going to take some time for the actual real move to come in. Okay, so in terms of our model, we came out with what I call as a wash and rinse. All right, because as I said, right, the market is highly efficient with all the algos, with all the technologies being built in. They know potentially where are all the levels, where are all our stops, and they know exactly, for example, the movement they want to move. But the market is also highly emotional, so they are a lot of made to believe narratives. There are a lot of temporary short-term price movement that allow us to put in that allow us to have the opportunity to trade. And that's what I mean as we're going to have a wash and rinse coming in, and that's the main core of the setup here. All right, now later on I will be showing the indicator in the MT4 chart, but I just want to let you know that we built this indicator to showcase what's wash and rinse all about. It's an indication, and we use it rather very flexibly, but in a way that later on, if you see the movement of US dollar, if you see the movement of gold, you know that the wash and rinse or a fake move is very common in times of important events, in times of high volatility. I just want to share with you one of the trades that I did, and I talked about gold just now, right? Gold has been one of our best trade, and it was moving up, right? If you can see this arrow here, right, that's exactly the point that the tall indicator pointed us for long to buy into gold. But that's on the movement where there was quite a downward movement, all right, and about 2 days ago. Okay, so we had the sell a bit of a bearish move, but that was just based on the narrative that it's meant to capture or to take away the attention that gold could be still bullish. Okay, there was a quick flip, what we call a wash and rinse. So market wash out and take out some stops, and quickly resumed its own main direction, the actual direction, and that's where we enter on this, and that's created a huge explosive movement because of a artificial wash event here. All right, so let me just let me just show my chart, my slides here. Okay, so you can see that this is, for example, MT4 chart on the US dollar, the dollar index. Okay, the theme that we are trading right now is that potentially the dollar is going to be weak, whether it's Biden or whether it's Trump who is going to be the president. because of the huge stimulus they're going to pass through. So we saw that in March, in April, the dollar has been coming down. The dollar index has been coming down. But on the assumption, what if that this might result in another what we call wash and rinse? And let me point to you what happened during the 2016, and I had that marked out. Let me just scroll to that 2016. Okay, so this was the 2016 election, right? Market was at the vertical green line here that marked in, right? That was the week of the election result. Okay, so we have the polls, we have the betting side all pointing that Hillary might be winning that election. I'm not sure whether Chris
Convincingly
remember
winning
that.
it, yeah.
Yeah.
Oh,
Remember
yeah.
that?
I mean,
Yeah.
it's a day I'll never forget, to be honest. I mean, I think Hillary was given about, depending on which year, the New York Times was the one who had 96% chance that Hillary Clinton was going to win. Obviously, the week before we saw it. Yeah. So yeah, I mean, it was
Yeah,
Anyway,
so
keep going.
market was already trading the US dollar the week before that it was a down. Okay, so this was the down that the market was trading based on the betting. Okay, now we are a week before the election. All right, so I'm not saying that Biden won't win. I'm not saying that the betting sites they are wrong. The polls they are not pointing to the right one. I'm just saying that what if the ball is round, right? How do we get prepared? So what the system did is that yes, it sort of predicted that there was a drop, a sell. We are looking for a sell in the US dollar at that point of time. But when it came with the election result, things sort of flipped and the system came out with a buy here. All right, what is a wash? Meaning that last week, at this particular week where it was a week before the election, price moved below a certain level, and then we calculate that level to say that, hey, look, what happened if there's a flip in the sentiments, and that sentiments resulted in a flip in price. So the system came out with another buy here, which gave us pretty much a huge up, right, in terms of the trade with the dollar. So what we did is that as a personal style, I avoided the election week. In fact, that this week I was very careful. I don't say I close all my trades, but for new trades, we are very careful in entering. We are really low in terms of volume right now. So I told my guys that let's take a break, right? Because what if it's gonna have a wash and rinse? So at that point of time when Trump won, we traded the reverse. Okay, that means that we actually went long the US dollar, and it pointed out to be quite a good trade. That's,
so your system, sorry, Champagne, rather than trying to prophesize, it reacts and it reacts to certain behaviors that are coming through. So all those people in that black candle who have sold are all offside, and then suddenly when the buying comes back in, those people are offside. They're forced to cover, and then that exasperates the move up, and your system recognizes that.
Yes, because as I said, right, the market is efficient. So the trend was sort of up, for example, the market is efficient, and there was a bit of a narrative, but the market moved to the original, direction that it should go. I think probably in a better way that I should be showing gold, and gold would give a very good, example of what I'm trying to say. So this was gold here. As you can see, gold was moving very well, right? In 2018, 2019, that's moving in an uptrend. At this place that I'm highlighting here, this place here, well, that's what happened. That was during the February period, February this year. I think that you can remember what happened in February. It's like because of the COVID and people were taken a shock, and things happen, right? So gold was even being sold down, right? So what happened is that the market is efficient. Probably the market knew exactly where they are going and where they should be shown. The implied volatility is all there, etc. So we learned to recognize that there can be a fake move, and the system pointed out to have a buy here. So that's exactly when we think that that down in gold is just overdone. All right, and we went long, and that's proved to be very correct. All right, we entered the love with gold at about here. You can see that
Yeah.
it pointed out another sell here. So that's fine.
So
We're
we
just waiting.
your system's just recognizing there that there's a lower high, and then you've obviously got the range expansion coming in. Is that a factor that you see?
Yeah, it's yeah. So but we don't only just get in based on a single time frame. So what we do is that based on the higher time frame, we will cascade lower into, let's say, a day or H4, and that's where we can really trade in a very tight stop loss, but to write in that massive movement. So sometimes we do carry trades for weeks, for months, but if we are lucky, we will carry a trade for hours. But I'm basically a day or 4-hour trader. I can't be staring at the screen, so I trade all those big move on the assumption that the market is highly emotional and they overreacted, and that overreaction gave us an opportunity, and that's like a washed here and the rinse back.
Okay, so in terms of I'm cognizant of time, so I just want to we've got 6 minutes or so, but I just want to sort of look at what your system is telling you now. If you're going across these different pairs, your system is that you're not running any positions right now. But this is obviously all automated, and when the wash comes in, should the wash come in, the system will automatically execute that trade, and you'll be in the trade until perhaps the price action tells you to get out. What are the risk parameters? Let's say that we do get the wash, the trade's executed. What are the risk components within that gets you out? Because trading around an election, when you get the whippy price action, liquidity is an issue. The idea of stop setting is an incredibly difficult time in very highly volatile markets. So how does the risk component of your algo work?
Yeah, just to back up a little bit. All right. In our method, we are just using the indicator as an indication. Very much we are still manual. Manual means that we decide when we should put in the trade, but we will let the algo manage to do the trade management. All right, so we will decide that when we should stop putting in a trade and when we should continue to put in a trade. So we still control the aspect, and rather to let the algo control the entry. All right, so let's just talk about gold, for example. So gold had a what we call wash bar here. Let me just point that out quickly because I know that time is tight. So we have a wash bar here. All right, so in order for us to go bullish on gold, we will assume that right now it is still bearish. All right, and for us to go long on gold, it has to pretty much clear this line here, and that line would be, let me just draw out it for you, and that line will be somewhere around here. So we need gold to clear and close above this line that's about 1930 plus minus, right? But at this moment, gold is pointing to us that is bearish at this moment. We just had a sell signal in gold, and this was the small little wash bar that happened because price moved above a previous high, for example, and it flipped back the other side. So we actually saw take a bearish stand in gold. Perhaps that it'd be more obvious if I would just point to you, for example, the US 30. So this is the lower time frame chart. So there was a push up, right? Push up in the US 30. All right, on one particular day, so that's somewhere around here, but immediately that didn't continue. Right, it flipped the other side. We had a sell signal, and that was doing us very well. All right, to sell into the US indexes and most of the indexes. This is exactly what we are seeing, that if Biden is to win, the US indexes might continue to move down, at least for the S&P 500 and the US 30, which is Dow Jones. All right, the next step we are not too clear at this moment. So we don't want to make any prediction, Creeds, but rather more to say that, hey, look, for those who attend this session, they can download a trial version, which is full function, and they can look at it and they can be prepared in case that there's a huge wash or rinse coming in based on whatever election result that we have.
That's excellent. Yeah, I mean, I think it's fascinating. I've had, to be honest, Binni, I could sit here and talk to you for another half an hour about this, because I find algorithmic trading absolutely incredible, especially when you can take, I know you use a discretionary element to your model here, but the ability to react to price moves around an election is absolutely key. You know, when you're seeing these news headlines coming in, this state coming in, and that potentially affects the situation. If we see, you know, for example, Florida coming in the way of Trump, and then he gets Pennsylvania, then the markets are going to move. You are going to see movement coming through, because people are saying, well, yeah, hang on, Donald Trump's got a realistic chance of winning this now, and you're going to see movement. And rather than me trying to sort of react to news headlines that are coming through, of course, this is going to be in price, and your algo is going to take advantage of those moves before most people have actually had a chance to do that. Because so I think the ability to take advantage of price moves for an automated system around an election, and even if you want to just turn it off around the election, is absolutely key. So, you know, I think that could do, I mean, that can obviously give you know, traders a bit of an edge around that situation. So we can't really go on for too much longer, unfortunately. But you're saying that if people want to find out a little bit more about the alien wash indicator, they can actually download that. If you've got an MT4 account with Pepperstone, you can trial and demo that, and you can get access to Binni. You can speak to Binni about how that all works. Yeah, if you also offer courses as well, and if people want to sign up to those, then they get a $100 reimbursement if they're a Pepperstone client. Is that right?
Yes, let me just go through quickly, and probably will take another 1 minute or so. Let me just do it real fast. So what I do is I encourage all of you to get the free trial, free function, and that's the website you go to. All right, so that's bit.ly/free-tor-ps. Okay, so you just have to fill in the form, and unfortunately, because this is sponsored by Pepperstone, you need an account, an MT4 platform, and a demo account from Pepperstone. If you are Pepperstone clients, you can just download this and put it inside your Pepperstone account. All right, I will also be doing one session to train on the use of Tor. Right, that's on the 9th of November. So once you register, every information will be there. Right, so do go and download that and try it for yourself. Okay, in case that you like to know a little bit more, then Pepperstone gave a promotion. If you take up the course, same thing, just go to the same website. Every single information will be there. The good thing is that you get to use the Tor indicator for 12 months. And if you make a funding of $1,000, all right, then Pepperstone would reimburse that $100 cash to you into your account. Okay. Well, at the end of the day, you can withdraw your entire money, which I don't hope that you do that. I mean, hope that you don't do that, right? But in any case, there won't be any lock-in period. You can withdraw that amount, right? It's more like to let you learn something, and to let you have a tool to trade. And I'm just going to have 2 live sessions, training sessions, plus 4 recorded webinars to let you know how to use the wash and rinse and the Tor indicator. All right, so that's all. In terms of the price is 252 Sing dollar. If you have the $100 cash reimbursement in a way that your cost free plus the use of Tor, that's 150 Sing dollar. All right, so any details, please just go to this website. Thanks, Chris. That's all for me.
Yeah, that's great stuff. So really interesting. Look, I think of all the speakers today, I think Binni's one of the few who runs an algorithmic program. Speak to Binni. We'll send out the recording of this, and we'll also get you can see her contact details there. So if you want to know about the performance of the indicator, how it's all done, how she gets her edge, I know a lot of people will be really interested about expert advisors and automated trading around, especially around volatility events, and how you can capture those moves without actually having to be in front of the screens necessarily themselves. I think this is a really interesting one for you to explore, and obviously the costs are there in terms of the trial. So do reach out to Binni, and I think explore and see how potentially how the indicator there can give you guys the edge. So thanks, Binni. Thanks for your time. I could have spent, as I say, a couple of hours talking to you about this situation, but hopefully there's enough taste in there for people to understand how Binni's system is looking to trade the US election. So thanks very much. Well, guys, we'll be back in about 15 minutes with Adam Khoo. He'll be speaking then. So thanks very much. Cheers, Binni.
Thank you. Bye-bye, Chris. Bye.
Mr. Khoo, how are you?
I'm good, but I'm trying to get my camera on, but the security preferences are not allowing me to do so. And the GoToWebinar is not appearing under my security preferences that I can check it.
Okay. Oh, we'll make do just to keep time going on.
Yeah. Okay.
I apologise for that. Well, for people out there who don't know Adam, Adam's a professional investor and trader. He's got 2 decades of experience in financial markets. So he was the founder of Piranha Profits, an online investing and trading school that mentors over 8,000 students across 124 different countries. One of the most watched financial commentators out there, mentors on YouTube. He's got over 25 million views on YouTube. So if you haven't seen his YouTube channel, there's a whole heap of different content there. He's a self-made millionaire by the age of 26, owns different, fairly punchy investment portfolios, and he's made some pretty good calls on the stock market going forward, going back, and recently one of the calls in the March lows as well. So Adam, welcome to the webinar. Obviously cognizant of time, and apologies for any kind of problems you've been receiving there. Let's jump straight into it. Talk to people a little bit who know, I'm sure there's a lot of people here who know who you are, and there's going to be a lot of people here who don't. Talk to us about a little bit about you and the philosophy that you teach at Piranha Profits, and the sort of what clients and subscribers can expect to see there.
All right, so I'm both an investor as well as a trader. As far as investing is concerned, I use what I call a value momentum investing approach. So I only invest in fundamentally very strong companies that have got wide economic moats, that have very predictable cash flows, that have got low debt. And I buy these companies when they're significantly undervalued, when they're selling below their valuation. And at the same time, I look at charts as well, right? Because there are a lot of value investors who don't look at charts. They just buy based on valuation. But I believe a lot in timing my entry based on charts. So I want to ensure that I enter at clear support levels. I look at wave patterns entering at retracements to support levels. So by doing that, I'm better able to time my entries, and I get better returns by doing that. Now, at the same time, for my investment portfolio, I boost my returns by using options. So I sell covered calls, I sell cash secured puts in order to generate more consistent income from my investments. From the trading part of it, I do both swing trading and day trading. All right. So for day trading, it's currency trading, but I don't do that as often as I used to because of family commitments nowadays. So I focus more on swing trading. And for swing trading, I tend to use options to execute my trades. Nowadays, mainly using credit spreads. Yeah. So in a nutshell, that's what I do.
Yeah, so the covered call side of things is really interesting, because I mean, I'm not sure how you'd be doing covered. You probably, looking to do covered calls over the election. Selling calls is pretty expensive to do, right? But or pretty cheap to do, I suppose, at the moment, because volatility is incredibly high. So if volatility comes in under, if realized volatility comes in under implied volatility, then you're doing quite well, I guess. To sell calls when volatility is this high is, potentially can make some decent returns. Is that how you're seeing it?
I mean, you want to sell options when volatility is high. So the VIX is relatively high right now. Now, I've been actually long the VIX for about the last 2 or 3 months. So now getting some pretty good returns on the VIX. I don't really have actually many covered call positions right now, because I'm actually very bullish on the market. I've been very bullish. So in fact, I've been selling a lot of puts, right? Selling both cash secured puts as well as put credit spreads.
Right. Okay.
So I'm actually very long buyers, because I'm the kind of person where I don't believe in arguing with the market. Okay, I believe in following the market. So the market's on a very clear uptrend. Okay, and I mean, the way I read the trend is very simple. Okay, higher highs and higher lows. Market's making higher highs and higher lows. The 50 moving average is clearly above the 150 moving average. The price above the 200 moving average. So we're on a clear uptrend. Okay, so even if we have got some short-term volatility going into the elections or even post-elections, it may drop for a day or two or pre-market, but the trend is still there. And the same thing happened back in 2016. Okay, 2016, going to the US elections, the market was on a clear uptrend. Okay, and everyone said that, you know, Trump's going to lose, including me. So I believe that as well. And sure enough, he won. And everyone said that if he wins, the market's going to crash, right? But what happened? He won. Pre-market, the Dow was down like 2,000 points. I remember that, right? 2,000 points pre-market. When the market opened, it closed up, and the market went up 12% in the next 6 months. All right, and I stayed long all the way. Why? Simply because the trend was up. So over the years, I've learned that don't try to outsmart the market. If you try to outsmart the market's going to give you a slap on the face, right? Instead, follow the market. Don't outsmart it. The trend is your friend is something so old, but it applies to today.
Yeah, it's interesting. I want to talk a little bit about, you know, I think you put your calls out there in Piranha Profits. These are trades that you're doing yourself, and people can mirror those trades. Is that right?
Yep. So I've got a subscription which is called the Ultimate Investors Playbook. So it's a subscription where every month I will present at least 2 companies that I'm watching or I'm buying. I do a deep dive research where it's like I do up to an hour presentation per company, right? So for example, this month, I'm doing one on Ant, the Ant IPO. So I've got a whole deep dive research on Ant, talk about the valuation, At the same time, through this subscription, I send alerts, right? So I tell people that I'm not a licensed financial advisor. I can't tell you what to buy. The only thing I can do is I tell you what I'm buying, all right? So the moment I buy something, immediately my students will get a screenshot, all right? The quantity I bought or sold, fill orders and all that. So it's as live as possible, where people more or less mirror my entire portfolio.
Yeah, that's great. And what are you telling people about the election? You know, I know you're bullish, and to be fair, I am as well. I mean, I was just setting the scene before you came on, just about this idea about fiscal stimulus. The market believes we're going to get fiscal stimulus in the US. It's a question of what extent and how easy that's passed, and that's going to be made up by the change in government. But ultimately, I think we expect to see stimulus longer term. We're seeing a bit of a cyclical recovery. COVID in Europe and the UK could change that sentiment situation, and we're seeing that in the US. And Biden has given us a view that he will shut things down, and that will impact economics. And of course, that's when fiscal comes back in. But by and large, the market, if you look at copper and industrial metals, are telling you that they see a cyclical recovery into 2021. You're saying that you're bullish on the markets because the trend over a longer term is up, and you talked about a couple of moving averages. But we do have this short-term potential volatility event where, if Trump comes in, the market's not priced for that. If we get a split Congress or we get a contested election, it could get pretty ugly. Markets may go into a bit of a panic on that. So you've got this volatility event. You've got this longer term bullish outlook because the market is ultimately trending higher. What are you telling people about managing risk around the election? What sort of strategies, what sort of things are you looking for from price action to help you identify those risks?
All right. Personally, I don't care at all about short-term macro events. So as far as my investments are concerned, I'm actually hoping there'll be a bit of panic selling. And the only way it's going to happen is if there's a contested election. If it's so close, goes to the Supreme Court like the year 2000, Bush versus Gore, it drags out, that could cause a short-term panic in the markets. It's going to last, I give you a couple of days or weeks, and I'm going to use that as a buying opportunity. I'm going to load up on my core positions, right? But I think that's unlikely. I think that's very unlikely, because the way I'm looking at it, Biden it looks like a clean blue wave sweep, right? That's how I'm calling it. And in fact, on YouTube, I say if it doesn't happen, I'm going to eat the MAGA hat, which I have.
You're going to eat what? Sorry.
I'm going to eat, the Make America Great Again hat. I've got that hat. And I'm going to.
I'd like to see that myself. I'm going to
eat it live on YouTube if Biden doesn't win. Okay, so so unlikely there's going to be a contested election, and it's only a contested election that's going to cause that short-term panic, right? But if it's a clear Biden win or clear Trump win, I don't see much selling. All right. So, I mean, there are 4 scenarios, right? The first scenario is Biden wins and Democrats flip the Senate. So if Democrats control Congress, the White House and the Senate, they can pass the policy very easily. So there's a high chance of a large fiscal stimulus of $2 trillion. Okay.
Yeah. Okay. Yeah. I'm with you on that.
People are worried about tax. It's going to raise taxes and all that. Yeah, first of all, that's not going to happen till late 2021 to early 2022 because they're not going to raise taxes until the economy recovers. So that's going to be far off. Okay. And even if they raise taxes, it's going to be lower than what people are expecting most of the time. Okay. That's the first scenario. The second scenario is Biden wins, but the Republicans control the Senate. They still control the Senate. Okay. And there's going to be a deadlock in that period, right? So that may result in less physical stimulus because the Republicans may block, the White House in wanting to go through with their entire plan, right? The third scenario would be Trump wins and Republicans control the Senate, all right? So that's status quo, okay? So status quo would be we still get a stimulus, but a bit less, maybe 500 billion, because that's what Republicans are pushing for. Republicans don't want to go above 500 billion in stimulus. So Fourth scenario is Trump wins and Democrats control the Senate, okay, which is very unlikely. Okay, in that scenario, I think that there will still be a lot of stimulus because that's something Trump and the Democrats both agree upon. It's Mitch McConnell and the senators who are freaking out over the size of the stimulus.
You're absolutely right.
And as well as the fifth scenario is the contested election, which I think it's the most unlikely.
So I'm not so sure about the contested election. I think if you look at the amount of absentee ballots that are going through, the amount of mail-in voters now, that sort of increases the probability that Donald Trump, I say Donald Trump, I'm not saying from a political perspective, but I think Donald Trump's shown the greatest appetite to contest, and I think with the level of mail-in voters, if it is close, then I think you could see a situation where he doesn't accept it, and it could potentially go to the Supreme Court. We saw last Supreme Court, or it nearly went to the Supreme Court in 2000, where we saw Bush versus Gore, and they decided to stop it before the Supreme Court for the good of America. But I think if it was to go to the Supreme Court, it seems unlikely that the Supreme Court would overrule. If Biden was to win, it went to the Supreme Court, and the Supreme Court now obviously heavily has that Republican change given the recent change in the Supreme Court. It seems unlikely that they would change the decision, because I think then you would get uproar in the streets. You'd see civil disobedience. You'd see riots coming through. That the whole democratized process is putting to bed. And that's when I think your markets would get really worried, because if you saw violence kicking out onto the streets, not just in Portland, but in other places in America, people would say consumer confidence is going to get impacted, business confidence is going to get impacted, and we don't have a government running America at the moment. So it just doesn't seem likely, even if it was to get to the Supreme Court, that they would overrule the situation. But I think there's a possibility it could get contested. I probably give it a slightly higher weighting than what you would do. But I do like your scenarios that you're coming out with. And for me, there's two major macro headwinds factors, and one is the size of fiscal stimulus. And if you're going to get number 3, or you say 2 trillion, I think it could be higher. I think it could be closer towards $3.5 trillion if the Democrats get all 3 chambers, the White House, the House, and the Senate. And I think in that situation, the question is will the US dollar sell off? In conventional wisdom is that adding another $3.5 trillion to the deficit is going to be a dollar negative. It's going to cause nominal treasury yields to rise. That brings the Fed into the equation. They'll have to do more quantitative easing to keep bond yields lower. We get a bigger balance sheet from the Fed, and suddenly you get the dollar weakening story as you get real yields moving lower. I actually say, there's that side of the equation. But the other aspect, if you were to see this blue wave, which you mentioned there, is that we could see the US dollar actually rally. And why would I say that? Because if you look at Europe, it potentially is going back into another recession. They've got incredibly low inflation anyway. You've got this COVID situation, which is causing lockdowns in France and Ireland and other places like this. You've got the UK, which is looking like it's going down the same sort of path. And then you suddenly got this situation where the Fed are active in the US. You've got $3.5 trillion of fiscal stimulus, and the US just suddenly then looks like the best house in a shabby looking neighborhood. And you suddenly go, where do I want to be invested? I want to be invested in the US. So everyone's chucks all their money out of Europe and goes into the US. Some will be hedged, some won't be unhedged. And you get the US dollar bid because the US dollar becomes exceptionalism. You know, you're a swing trader, so you might not have a view on this, but how do you stand on that blue wave and the dollar? I've given two theories, and Price will tell us. Well, where would you sit there?
I think it can go either way, really. And I always say that you can never predict how the markets will react to an event. Okay. And again, I talk about all these things about elections and all that, but it's really for entertainment purposes. In reality, it plays no part in my investment or trading decisions. Zero at all. Okay.
Yeah.
So like I said, for investing, I take a very micro perspective. I look at the individual companies. Okay. So for example, I'm invested in your Microsoft, your Amazon, and your Apple. Are they generating more cash flow? Are they growing their top line, bottom line? That's all that matters to me. All right. And if their share price comes down temporarily because of whatever trade war events, it's always a buying opportunity. Okay. I only get out of an investment only if that company loses its competitive advantage in some way. All right. So that is so I think a very micro view on investing, microeconomics, not macro, right?
But I want to pick your brain on that, Ben. Sorry to interrupt, Adam. I want to pick your brain on that because, you know, if you are to see Biden, I know there's a lot of people in here who probably say, you know, Trump's got this in the bag, the polls have got it wrong, and I'm sympathetic to that view. I don't really have a vested interest. I can't vote, so it doesn't really bother me. I trade price, like Adam said there as well. But if we were to see a blue wave coming through, this clean sweep, so to speak, you know, there are going to be some headwinds for tech. You know, you know, it's not as favorable as under a Trump administration. I know Kamala Harris is very, very in bed with the big tech firms, so it's unlikely that you're going to see them go and smash big tech. But if we are going to see, you know, you talked about cash flow in these businesses, and I agree. I love looking at cash flow in businesses. These businesses are rich in cash flow. But are these businesses that you're investing in, they are effectively quasi bonds? You know, when you look at those cash flows and you're using, you know, nominal treasury yields as a discounting mechanism to look at the, you know, the present value of those businesses. If treasuries sell off, you know, the hurdle rate, the present value of those companies is going to effectively fall. So how does that reconcile with you then? Because you say you don't look at this event, but if we were to see treasuries sell off, then that will have an effect on the cash flows of those businesses, or the perception of future cash flow.
Well, I use a 20-year discounted cash flow model, right?
Yeah.
So even if my discount rate changes, I mean, we all use different discount rates, right? So I tend to use my own bastardized formula, right? So I take the risk-free rate plus beta multiplied by the market risk premium. That's my bastardized formula. So I mean, sure, you know, the interest rates could change in the short term, but in the long run, I don't think it makes much of a difference, really. Yeah.
Okay. Well, I tend to agree. I mean, I think you. I think you know, if you go on.
Yeah, and the thing about me is, for example, right? Like I value Amazon right now at about $3,800 per share, right? Based on my 20-year discounted cash flow model, right? 3,008. And I never buy at valuation. I always buy when it's like 20% below valuation or 25% below valuation. So I always get a good margin of safety on my shares. Yeah, so it doesn't
You're not
matter.
getting that in tech stocks at the moment, then, are you? Because their valuations are pretty crazy, or is that just, you know, when you discount them, those valuations do?
That's a big myth, right? So it depends. For example, okay, Zoom is freaking overvalued. All right, Apple is freaking overvalued. Tesla is overvalued. Snowflake is overvalued. Amazon is undervalued. Microsoft is undervalued. Facebook is fairly valued. So it depends. You can't really take a broad sweep to that.
Yeah.
So like for example, Apple, I value Apple at about $90. Okay, my value is about $85 on Apple, right? So right now it's selling at about 115, overpriced. I won't add Apple right now. But Amazon is slightly undervalued.
Talk to me about FX trading. I've got a couple of people really interested to pick your brain. You talked about being a swing trader, but you also take this view that you don't really want to, these elections don't really matter. I mean, I know that's more about your equity process. If the trend's up, you've got this sort of short blip that comes on the radar. But how are you, how are your systems treating, I don't know if you can see this, I'm not sure if you have the ability to see this, but
yeah, I'm seeing that. Yeah. Okay, so
I'm just going to put
yeah. So for FX,
I'm going to get euro. I'm going to just get let's get euro yen. Let's get euro dollar going on there. Just 2 secs, because obviously that's one of the key ones. So I'm just going to give you a quick setup on euro dollar there, which you can see on the daily. You can see it's trading sideways. So what's the market telling you here, and what would your system be saying around the sort of swing strategy around the election?
Okay, I don't swing trade FX. For FX, I purely do day trading, and I trade on hourly candles, 1 hour, 15 minutes. So I don't care about the macros at all. Yeah.
Right. Okay.
And
okay. So I've got. Yeah. Go on.
Yeah. And so for swing trading, I only swing trade stocks, and again, it's purely based on the technical setup. Okay. So I don't look at any of the macro stuff. So if I see a dip on the uptrend retracing to my support level, I see my stochastics oversold, right? I sell a credit spread, and that's it.
Okay. So when you're trading, when you're day trading euro dollar, for example, or any currency, how do you go about scanning the various currencies to choose one that you like to day trade? I mean, what are you looking for? Is it momentum? Is it you mean reverting when you're day trading? What's your strategy for day trading these currencies?
I'm a trend follower. That's it. I'm a trend follower. So I've got two main systems. One, I call it the bounce system. All right. So the bounce system is one where you identify the trend. So I look at your 6, 18, 50 moving averages, but there's no magic formula. I can use whatever moving averages, right? So I see a clear uptrend and I wait for a retracement to a support level. So usually I want it to retrace to, for example, the 50 moving average, and then I want to see confluence, right? So when I see it retrace to a support level, I want to see multiple support levels. So for example, it retraces to the 50 moving average, and it's a Fibonacci level, and it's a previous horizontal support level. I've got some confluence over there, and I just go long, right? And I put my stop like 20 pips below. I put my profit target like 30, 35 pips above, right? So if I'm wrong, I lose $1. I'm right, I make $1.52. That's it. Very simple system.
Yeah, I mean, I'd love to be in a position where we could see your charts and go through that. I think we'll have to do another video for clients to show how these systems work in practice, because I'm sure there's a lot of people who'd love to see all this stuff there. But I mean, I too. I mean, I run a mean reverting strategy, which is slightly different from your trend following situation. But again, I'm looking for confluence of levels. I'm looking for where implied volatility moves out, where that might marry with pivot points and other factors as well. But when I get confluence in levels, when price has had a move on a day, then I'll be looking to see how price reacts around that level. And if we do see this, a bit of sellers coming in after a big rally, that to me is where we get the high probability. So I'm looking at levels intraday, but I'll use a confluence of levels in a slightly different way that you'll go on the trend. I'll do that on a sort of mean reverting situation. So, but again, yeah, I think the sort of similarities there is we're looking for agreement or a multitude of support and resistance levels to work off in that situation. I wanted to pick your brains quickly about, we've got a couple of minutes left before we sort of have to have a break. I want to pick your brains about the oil markets, because if we, Biden has given us this idea that over time he's going to move to new energy, and he's going to put $2 trillion behind new energy and alternative energy, solar, and it's going to slowly, very, very slowly, multi-decade phase out the fossil fuel markets in the US. And I think alternative energies have had a big run. If Trump gets in, or we get even a Republican Senate that stops a lot of these measures being passed, Oil companies, in my opinion, are going to absolutely fly. Exxon, Chevron, you know, some of the petroleum, the refiner stocks, I think will do very well. You know, you talk about tech, but you know, if we do see the trend starting to move more positively in some of the crude names, they're trending lower at the moment. But if would they come up on your radar, or the fundamentals just too weak?
Okay, Mark. Sorry, Chris. There are certain industries I totally stay away from, and one of them is oil and gas. I totally stay away from oil and gas. Whether as an investor, because it's almost impossible to predict oil prices or commodity prices. So I stay away from materials, commodities, oil and gas. It's an industry that I don't touch at all, because it's so difficult to predict the future of these commodity prices, which influence the earnings of the companies.
Yeah.
So,
well, I think that's a lot.
Yeah, I've got no idea.
No, well, I think that's a great way. I mean, I think, you know, everyone's got a trading plan, right? You know, well, you should have a trading plan, a process, a framework which you adhere to. And if the trades don't fit in that trading plan, you don't take them. I mean, that's how we get an edge, and you have your discipline not to take those trades. And so I think you've got a very strict discipline, that is that, you know, you won't touch those. It's like, for me, example, in my trading, there's certain setups, there's certain moves and you know, fundamentals where I would just say, I'm just not going to touch that. It doesn't work within those situations, and I won't take that trade. And so I think that, you know, that's great. I mean, I think there's going to be a lot of traders, if we do see Trump win, who are going to be buying, you know, crude, or actually I think you're probably going to get best bang for your buck from Chevron and Exxon. But I think it's really good, you know, like in your situation there, that you do have this stringent criteria for where you are, you know, the sort of markets that you're going to be touching. So that's you know, part of the framework that you work in, right?
I think the trouble with a lot of traders is that they try to, you know, do too many things, right? So it's like what Bruce Lee said, right? Just, it is better to know one kick and master that kick 10,000 times than know 10,000 kicks and master it only once. And I find a lot of great traders I know, they just focus, they focus within their circle of competence, right? And they don't get out of it, right? So, like, okay, yeah, so I can give some ideas. For example, if Trump wins, you should see a short-term boost in defense contractors. Lockheed Martin, Raytheon, okay?
Raytheon, yep.
You see a short-term boost in oil and gas companies, ExxonMobil, Chevron, you can look at XLE, ETF. You will see a short-term boost in financials, right? JP Morgan, Goldman Sachs, and big tech, okay? You will see some maybe short-term headwinds on China companies and companies with China exposure, like 3M, like Thermo Fisher, like Procter & Gamble, all right? Then if Biden wins, you will see, you should see more tailwinds on China companies, right? Not that the Democrats love Chinese, but I guess they're less aggressive towards, you know, dealing with the Chinese. So I think, you know, they would, you know, roll back some of the tariffs, so that should be a positive for US companies with a lot of China exposure. Again, you've got two. One would be the B2B companies, like again 3M, Honeywell, right? And then you've got the B2C. For example, Apple, Starbucks, Nike, Disney have a huge chunk of their revenue coming from the Chinese consumer, okay? And then don't forget marijuana stocks, okay? If the Democrats sweep, marijuana stocks should see a revival, okay?
Yeah, I think there's a question of how much is priced in. Adam, we're going to have to call it a day, unfortunately, because they're just keeping their. I apologise for. I mean, I could have spoken to you for ages. I'm really enjoying this conversation. Honest, I think we'll have to do this another time with video and go through your charts and go through your strategies and those factors. But if people want to get in touch with you, like we will send out your details. I think you've given some really great tidbits in the time that you've been here. But if people want to get in touch with you, what's the best way to go about doing that?
Okay, they can go to my website, piranhaprofits.com, right? Piranha with the fish, right? Profits.com.
Yeah.
And if they want to get me, they can send me an email at support@piranhaprofits.com.
Cool. Well, we'll send that out to people with the recording. So do get in touch. Have a look at Adam's website. Some absolute gold on there in terms of education and what he's doing there as well. Adam, I want to thank you for your time in that short space. You know, there's been some good nuggets and some good wisdom about how you had played in the election, and you know what you're doing with stocks and staying out and the various factors. So thank you for your time today. You've been really generous, and I really hope everyone's enjoyed Adam's chat. So thanks, mate.
All right. Thanks for having me. Sorry for the technical issues.
That's okay. Take care.
Bye.
Thanks, everyone. It's Chris Weston here again, Head of Research at Pepperstone. I've got Jackie Fung here, who is MoneyTab, part of the MoneyTab crew. Jackie Fung is a former analyst from State Street Corporation in Toronto and Macquarie in Hong Kong as well. He's managed funds. He's actually been a fund manager himself. So I think it's really interesting that, you know, you're not talking about someone who just runs an education service. This Jackie's actually managed a decent portion of money, had a reasonable amount of money, assets under management. He was a founding partner of MoneyTab. He's delivered a number of seminar courses across Hong Kong, Macau, Malaysia, Singapore, Canada, and even here in Australia as well. So you know, he's certainly been around the world, you know, speaking to people about the various factors. So I think it's really interesting to pick his brains and his strategies today, obviously with the US election just around the corner. MoneyTab, just to give you a bit of background about them, and I'll let Jackie explain a little bit more about what they do. One of the biggest investment education platforms set out of Hong Kong, founded in 2011. They've got a really big following on social media. So again, you know, like some of the other speakers, if you haven't seen their YouTube channel, do go and have a look at MoneyTab YouTube channel. Facebook, they've got 270 odd thousand viewers there, or subscribers. I'm showing my age by not knowing this. 2,200 paid mobile user apps as well. So, Jackie, thanks for giving up your time today. I've given a little bit of an introduction about yourself and also MoneyTab. Talk to us about what MoneyTab does in terms of the assets they trade, the markets they trade, and how you go about, you know, with your framework for selecting stocks, FX positions, gold. You know, what is your framework there?
Cool, thanks, Chris. Once again, my pleasure to joining today. You actually just hit most of the points already. So MoneyTab, it's all good. Yeah, MoneyTab is an education company. We do not handle any asset management. So we used to have asset management license with another entity. So we used to, well, we still do. We trade with our own money and stuff like that. But yeah, so we mostly deal with equities trading and portfolio management, like you said, risk management. Right now, we're still keen. For myself, I'm big on the US stock market. I've been trading on the stock market since 2006. So we're looking at about 14, 15 years. So that was when I was about to graduate university. So I guess you can kind of guess how old I am. And then, yeah, I started trading options in the beginning, and I lost a lot of money in 2008. And I realized this is not a good long-term strategy. And yeah, ever since then, mostly valuation models, buy and hold. I read Warren Buffett's he suggested to read Benjamin Graham, one of the book I started reading. And so I just started learning a little bit about how to pick stocks that are fundamentally strong, which I guess we'll discuss a little bit later. And then now, yeah, we're just mostly buy and hold. But right now, with the situation with the election, with COVID, with all that stuff happening, we have to do more hedging because the risk is getting higher. The VIX, the volatility index actually just skyrocketed just now. So yeah, had to make some hedges recently as well.
So how do you hedge then? I mean, I see that you use contract for difference, CFDs. Something obviously very close to our heart at Pepperstone. It's embodied in our DNA. But how do you use CFDs? And what do you use? I mean, apart from maybe using for hedging, but you know, you use them for speculative purposes and factors as well.
Yeah, good question. So that's one of the questions we always get. So how do we hedge? Why don't I just sell it and then buy it later on? So what we used to do when we used to run a fund is we used to use options to hedge. So that would actually that'd be the perfect hedge, right? So then we can lock in a price when we can sell it. But now that I don't have that much money to handle, it's just my money, right? So then we do something simpler. So what we use ETFs, we use futures to hedge on the overall index. So let's say S&P is dropping 1.5, 1.6% right now. So we're using SDS or simple ETFs to hedge the S&P 500. CFDs I mostly use for speculation purposes, right? So because you're actually not owning the asset, but you're actually buying the contract, right? So mostly CFD. I actually just trade last night. We have for our subscribers, they know I have a video every night at 9 p.m. before right after the market opens in US. So I do like a 10-15 minute on our app. 10-15 minute video to talk about my strategy, the day, what we're gonna do. So I actually short DAX last night, and on CFD, and yeah, it's actually very simple. I don't do anything crazy. So it's a triple bottom. You can see at
I've got the DAX chart up at the moment, so you can see. I'll just pivot point off here.
You can see the support line at 12,300 points, and give or take. You see how it didn't break since July or June, late June, and then huge bearish candle broke 2 days ago. So I was like, what the hell? Let's just go for it, and it's been paying off right now. So it's almost hitting my cut profit point. So that I got lucky at that. A couple of days ago.
I think this to me now, I mean, you can see the ATR rising, so realized volatility is moving up a little bit, but you can see now that this market here in Germany, I mean, obviously this is one that has a lot of problems. SAP the other day, SAP Global, one of the tech stocks there, coming out with a major profit forecast, has a huge weighting on the index, or did have a huge weighting on the index. Then you've got COVID hitting Europe now,
exactly.
and I look at this market and I say that there's just really no buyers. There's no, you've got this buyer's strike. When you've got no buyers, you've got a lot of sellers coming through in the DAX. You tend to see your markets falling pretty clearly. So I would personally, I mean, I would be staying short this market. I'll be looking to sell any kind of rallies in this at the moment, and just using this 5-day exponential moving average as my sort of guide until price can close back above this, because it seems, I think we could be seeing 10,000 in this market. I think, selling rallies seems to be the way to go here until, just where's the good news going to come through? So, I mean, I think that was a great trade. It feels like there's probably some juice. Short covering rallies will probably be sold, in my opinion. So, yeah, it looks pretty good. But let's talk the US election. I know you're not a political expert, neither am I. But it is a risk, and look, a lot of the guests that we've had on so far have all said, we take a longer term view. We're not really too concerned about the short term. The election's noise for us. But how do you see this? I mean, it's very difficult to trade an election. We know that because you've got a market that's gone some way to discounting Biden as a president. Whether that happens or not is yet to be seen. Obviously, a lot of mistrust on the polls. You've got the Senate could go either way. The House will go to the Democrats, in my opinion. There's all these different permutations, and we're watching this state come out, this state coming out. The mail-in voters now means that certain states might not even get a result for days. It's going to be very difficult to get, certainty around that, and that means the higher chance of volatility. So, what do you see as the election? Is this something that you're going to be involved with, and if so, how will you be trading it?
Yeah, that's definitely something I'm going to be looking in for the next week or so, right? So I'm not involved. I'm not American, so I don't get to vote. I'm Canadian.
no, that's what. Yeah.
But yeah, definitely like looking at it every day. But you can see the poll. It's staying. The polls are saying that Biden is going to win by a large margin, right? But we actually just did a interview with Mr. Jim Rogers, the legend. So he mentioned never count out Trump, right? Especially right now, because I'm 33 years old. From ever since I was a little kid, American president has been running like for 8 years every single time. Obama did it, Clinton did it, and George W. Bush did it. And then right now, Trump is in his first campaign, going for his second. So it is hard to like elect a new president. It has been done before, obviously, but one thing we also have to take into consideration is the poll, which I actually just watched a YouTube video on NBC that I mentioned today. The poll doesn't take into consideration of the fact that the U.S. president is elected not by the number of votes that the person with the more votes, right? We know Hillary Clinton had more votes in 2016, right? It's whoever gets whoever gets the most electors, right, from each
electoral college seats. Yeah.
Exactly. So that's going to be, so that's not taking into consideration in the polls. Having said that, obviously right now it'd be kind of unwise to bet against Biden right now. All the numbers are against, but for myself, I don't know who's going to win, obviously, but I would have a plan for both, for either Biden or Trump. And right now, I think, yeah, the market has spoken that, like JP Morgan just came out today and said, if Trump wins, S&P is going to go to 3,900 points. If Biden wins, is more uncertainty. And I have the similar views, I would say.
Yeah, I mean, I take the view that, you know, if I go back to 2016 and I said to you, Jackie, 2 days before the election, right, we're having a beer, and I said to you that, by the way, Donald Trump's going to win the election. Yeah, it was 96% chance that Hillary Clinton was going to win it. You would look at me and go, how do you know? I said, look, I know, just trust me on this, Donald Trump's going to win the election. I know that for a fact. The question that I've been asking clients today is if you knew that, would you have been able to make money out of that situation? Now, of course, if you went to the bookies and put it on a fixed, you're guaranteed to make money because you have that. But if you'd gone to bed in the US and you'd gone structurally short the S&P because Donald Trump winning was going to cause an all-out, you know, the world was going to collapse, he was going to go to war with everyone, you know, and the world was going to be so uncertain that you've got Donald Trump. The market, everyone was saying, you know, the dollar yen's going to go down, dollar Swiss is going to go down, gold's going to go through the roof, treasuries are going to rally, and the S&P is going to get absolutely clobbered. Well, for the first 4 or 5 hours, that was absolutely, you know, that was a brilliant trade. It was true. You would have made money. But then you take your eyes off the screen and you walk away, and as soon as Donald Trump's speaking and taking his acceptance and sound presidential and starts talking about Trumpflation, we see the S&P go on this huge rally, 40% rally over the next, you know, year or so. We saw the dollar rally against all those currencies, and treasuries selling off violently. And so you would have lost money. So the idea that you knew the outcome, but you probably still would have lost money unless you'd actually closed out those trades. But if you weren't in front of the screens, you wouldn't have done so. And so therefore, you know, the idea in an election like this is you may know the result, but are you still going to be able to make money? And I think I use that example because you said that you've got a plan for both sides, and I think that's absolutely right. I take my dollar view, US dollar view, which is that, you know, a blue wave scenario is the conventional wisdom, and that is going to be very bearish for the dollar. Some of it's priced in already, but, you know, that's going to be very bad for, it's going to be great for reflation. So Aussie dollar is going to rally against the US dollar. You're going to see the Mexican peso rally against the US dollar. The dollar is going to sell off on a broad basis. But I say that there are some signs that suggest that the US could be really quite a nice place to park your capital. And so the dollar could rally in that. So I think your point of having two school of thoughts and recognizing price action when it comes through and accepting that price action is really, really important. Why don't I share my screen with you?
Sure.
And we can go through your process a little bit more about stock selection. So you should see now this coming through.
Show my screen. I got it.
Yeah. I can see your CNBC website at the moment.
Okay, great. Give me 1 second because I can't see anything. All I can see is our faces. So let me minimize this. Give me 1 second. Can you see our faces right now? Sorry. Okay, I
can't see I can't see faces. I can see your screen. I can see that you've got a CNBC website up at the moment.
Okay, let me see how. Give me 1 second. I gotta minimize this. Okay, perfect. I think I got it. Okay.
Okay, so you're big in the equity scene as you talk about there. So, you know, in terms of your selection of stocks, talk to me about your process and what you do over there and your own mentality.
Yeah, so we're pretty simple. We're fundamentally based. We're looking for companies with higher growth, but stability is a huge thing. So we don't want companies like Tesla per se, right? Tesla right now, we just had the earnings. went through the roof, but they've been losing money for the previous however long they've been in the market for that long, right? But their stock price went up 5-fold, 6-fold, 7-fold. It's still not my cup of tea, right? So we want stability, we want high growth that is sustainable. So in our previous webinars, I introduced 2 stocks that we think, fundamentally speaking, and because of the upcoming election, that we think it's going to be beneficial. In fact, actually, ever since we talked about it in, let me say, what is it right now? October. I think our previous webinar is in September. So we did a webinar on our platform. We had about 2,500 people who joined, so they can be witnesses as well. So one of the company we mentioned is Nucor, and if you ask me what Nucor does, the business model, I have no idea, to be honest, because what they do is so things that I'm not expert in. So they do steel making, right? If you ask me, please explain what's going on in this picture, I have no idea, right? So, but what I can tell you is, fundamentally speaking, they're a very strong company, right? So when we're looking at basic fundamental, return on equity, return on asset, their margin, it has been going up and up since 2013. And then we want to make sure the debt to equity ratio is also very stable, and the interest coverage for this company has been very stable as well for the past couple of years. One thing that we know is that whoever wins, Trump or Biden, they're both going to be putting huge amount of money on constructions for the next 4 years. So for Biden, we're looking at $1,300 billion, and with Trump, we're looking at $1,000 billion budget plan on construction. So we're thinking that these companies are going to benefit from these type of subsidies or policies in the near future. And then when we talked about it, I have the date right now. This is the day we mentioned about this stock, which was, it doesn't say. So it was trading at about $40-ish, and then actually it went up to about 50 recently. Actually hit our stop right here, $50. So once it hit about the $44 mark, you can see from a previous chart, we saw support with a big tunnel, and then so we're saying if there's support right here at about $44 to $45, then this could be an opportunity. As we can tell, there's a huge bullish candle that we saw, and then actually just went straight to the $50 target that we set in the beginning. So that's an example of what we try to do here with MoneyTap, as well as so
you're looking at the probabilities. You're looking at strong companies that have been sold down, maybe because of macro influences, and that's offered an opportunity, and you're using the technicals to look to come into those positions as well.
Exactly.
And so you're looking at sort of probabilities, fundamentals, and technicals to get a higher probability setup. I think that's a great way to look at things. So Nucor's one. I mean, interested. Go back to the Nucor chart.
Sure.
When you're looking to get into the trade, you've looked at return on investment. You've looked on, the fundamentals that you look at there, and then you've looked at the if you go to the trading view chart, you've looked at all these various factors, return on invested capital and factors. But you're looking for that. You're looking to hit into horizontal support levels. But when you've got that, what do you look for then in terms of understanding? You've got your entry point, but what are you looking for in understanding, your risk? What do you do for risk management? And then obviously as a result of that, choosing your sort of position size. How, as a fund, as a personal investor yourself, I mean, how do you go about allocating a certain amount of capital to each position?
Yeah, that's a good question, actually. So that's the hard part, actually. Picking a winning stock is quote unquote easy, but how to capture the profit is the tough part sometimes. So with these stocks that we have during each of our webinars, we actually don't buy it ourselves because it'll be kind of advisory and then buying on our own. But let's just say, for example, I'll be holding this Nucor company. So what we're saying, we actually have a cut profit point, and we also have a cut loss point. So it's very simple. So let's say it drops below this $44.80 point. Then we're looking at the next support line, which comes at the ultimate support line, which would be the previous low of 35 and 80 cents. But before that, let's say, that's almost $10 of loss right there. So let's say your risk level, you don't want, that's too high tolerance level for you, then we'll be looking at maybe $43. So each support line, we're looking at for Fibonacci, we're looking at simple basic supports. If it keeps breaking down, then you're going to be in more trouble. So same as our target as well. So we're looking at resistance, we're looking at support to help us manage our risk.
Yeah, but if you're in the trade as well, you talked about having hedging strategies and factors.
Mm-hmm.
Would you be looking to buy puts or potentially short CFDs as a hedge against that situation? I mean, what would you be doing in terms of looking to hedge
my investment portfolio, not my trading? So I basically, so let's say I have 10 stocks right now, which I'm holding about 10 right now, mostly techs, mostly retails. So instead of me putting it each one of them, so what I do is simple. I calculate my beta, my portfolio beta, and versus S&P 500, and then because of this calculation of my portfolio beta, I will short a number of S&P 500 futures or S&P 500 short ETFs. So last night, what I did was I just bought some SDS. So right now I'm holding about my portfolio of 50% to 60% stocks and 30% SDS. So that way I don't have to sell my stocks, but then I'm also less risk. I'm more risk averse to the market right now. So that's simply what I do. Unless I see more risk involved, then I might sell some. I might even do some CFD tradings. But as of right now, that's what I'm doing right now.
Yeah, you talked about beta, and I mean, firstly, just for people out there who haven't studied applied finance, just give us a sense of how beta helps you and what it is and when it helps you, and how you can use that for diversification purposes. Because if you're running a trading portfolio, having certainly investment portfolio, but certainly from a trading perspective as well, having diversification over a US election can be quite advantageous. Obviously, if you've got some crude, some tech exposure, some staples, those factors, those situations. So, I've studied applied finance myself, and I understand what beta is, but there's people out there who don't. So, what is beta, and how can you use that to understand and help you with diversification in your portfolio?
Yeah, so from my memory of studying beta, alpha, and those type of risk management terms versus what I do now, it might be a little bit different. But so beta in essence is basically your portfolio versus the index, right?
The movement,
your exposure. So let's say your stocks or your portfolio, when the market goes up by 1%, how much exposure are you to that 1%? So let's say if your beta is 1.5, 1.6, then your exposure is 1.5 or 1.6 times of the market, right?
Yep,
so if you're just hedging the S&P 500 on its own 1-to-1 ratio, then you're actually not hedging completely, because your portfolio could be at a higher beta or lower beta. So let's say, like you mentioned, Chris, if you're holding tech, if you're holding biotech companies, chances are the betas are going to be higher. So you're going to have your risk towards the market is a lot higher than companies such as staples or retail market per se. Like I'm holding Dollar General, I'm holding Costco. So those are lower volatility. The beta in essence is you're looking at 0.6, 0.7. So what I do is I calculate my portfolio weighting and my actual weighted average of beta in my portfolio, and then I take that number and then I hedge according to my portfolio beta. So that might sound a little bit complicated, but yeah, in essence, that's what we do. So that's why we have courses to explain some of these stuff too. Yes.
Yeah, we'll talk about the course in a moment, but I think that's really important. If people are looking to get, I know there's a lot of FX traders in this room, and maybe some of this stuff doesn't resonate as much, but people who've you've managed money before, and this is what the pros do, right? So they will they will look at the variance in the portfolio, they look at beta, and they'll look at these fairly sophisticated ways. I mean, nowadays it's all about options overriding and not going to cash, and having ways to take advantage of higher volatility and factors. But in terms of actual portfolio management, there are some these are what the big boys do effectively in terms of spreading the diversification and being prepared for these type of US election type situations. I also want to talk about going back to the election itself. Now, obviously, for me, we are going to see some short-term moves, but if we're going to see a situation where we do see a Democrat clean sweep, I don't think that the first move is going to be the last move. I think that's going to cause a trend in market to develop. What that trend looks like, I mean, I can make a judgment call. The market will tell me what's going to happen. If we see Trump in power, I think that's going to cause a trend in certain assets as well. How do you feel about that? Do you think that the first move is going to be the right move and create an ongoing trend, or do you think that we could see some pretty whippy price action that is just going to be pretty Wild West sort of stuff?
Yeah, so if I had a vote, some people are not going to be agreeing with me. I know, but I would vote for Trump because I'm holding U.S. stocks, and I know what he's gonna do for the next 5 years, right? So I'm being selfish, right? So like I have no idea like the social part about it or the other economic part or everything. I'm just speaking on behalf of my portfolio per se, because that's going to be easier for me to guess what's going to happen in the next 4 years. We know the tax rate is going to be low, and then we know Trump is going to keep helping the big guys, to be honest, right? The lower taxes, repatriation of US dollar is going to help the Apple, the Amazons, and stuff, and these big tech companies, right? But at the end of the day, I don't get to choose, right? So if Biden wins, it's going to be tough. It's going to be more uncertainty for me, right? Because my portfolio, I'm holding more tech, I'm holding more retail. So the first move is going to be important to see, and then to see how the market reacts. So next week I'm going to be up all night to be watching. So to be honest, I don't know what's going to happen. I don't know what kind of policy he's going to come up with, but I know one thing for sure: Biden or Trump or whoever is going to be, well, there's only two choices right now. Whoever runs the president, he's not going to let the S&P 500 run to 2,000 points, right? So even though the economy is doing bad, the stimulus package is going to come however way it will be. But that is going to be something I'll be watching next week. So yeah, I think
the other way to look at it, if you do see Trump at the White House and you see the Democrats get in the House and you whoever gets the Senate, you've got to think about the role of the Federal Reserve as well. We haven't really talked about this too much, but at the moment the Federal Reserve have got this new average inflation targeting regime which they've moved to, and they're trying to proactively create inflation to be above 2% for a while. In the December FOMC meeting, we're going to hear more about how they're actually going to do that. At the moment, we know that what the dynamics by which they'll set policy and their reaction function, but we don't actually know how they're going to do that going forward. If we maintain the status quo that what we're seeing at the moment, then the Federal Reserve don't get that fiscal impulse that we would get under a Biden administration and blue wave. And therefore, we just have no idea how on earth they're actually going to proactively generate this level of inflation. What we do know is if they are really hell-bent on trying to win the market's respect, they are going to be more aggressive than they've been before, which means more QE, yield curve control, further asset purchases. And that's only going to be good for the stock market, who loves that perception of liquidity, right? So I think the idea about, if we do see the status quo, Trump in, we get a lower tax regime, but it also means that the Fed are probably going to have to do more to try and boost those inflation expectations, and the market will probably like that as well. I mean, how do you consider what the Fed are going to be doing under a different leadership regime?
I'm thinking whoever Democrats, Republican, whoever wins, we're still going to be looking at a crazy amount of money of QE, like you mentioned, and then because let's face it, right now the U.S. economy right now, they need this money in order for the S&P 500 to maintain the level as it is. But there's one thing that I had the interview with Mr. Jim Rogers last week. He said a very good point. I don't want to take his credit for sure. So in his lifetime, which is around 80 years already, so I've been half the time he's been on the earth, right? So he mentioned that right now America is printing the most money it has ever printed every single day, right? So why is the stock market at an all-time high and the economy is in a recession, right? Because right now it's very simple. If I'm broke and I go to the bank and I keep borrowing money, obviously the assets are going to go up. Everything is going to do well. But once these debt is going to keep piling up, eventually there's going to be more problems coming. Inflation, they want to create inflation, like you say, but it's not a natural way of creating inflation, right? The economy, the jobs, they're going to be it's going to be helping, but a lot of it is synthetically creating it through these crazy amount of money printing. So that's going to be a hole that whoever is going to be the next president, they're going to be having a tough time getting out of. So that's something I'll be worried about.
I think one of the interesting statistics there, and yeah, Jim Rogers is a legend. You know, congratulations on getting him on your show, and I think that sort of speaks testament to the reach that you must have. Because I've followed Jim Rogers for years, to be honest. When he made some commodity calls in 2008, he's like, either way, look, commodities go up. Like they can only, there's no way that they can go down in this scenario. And he was bang on the money. I mean, he's made some bad calls as well, but you know, Jim Rogers is a legend. So I think that's obviously testament to what you're seeing in that situation. But put this in perspective, we've lost about $2 trillion worth of GDP and output in the US through this COVID situation. We've seen a combined $5 trillion stimulus if we look at the balance sheet from the Fed and also from what the government do. So you've got a net withdrawal of about $2 trillion, and that's been met with a $5 trillion stimulus. So you're net up about $3 trillion. So how do markets not rally in that situation?
Yeah, it's basic math.
Yeah, I mean, it's basic maths. I mean, the markets are only going to go one way, which is why we're craving more fiscal stimulus now, because economics are starting to plateau. A lot of this fiscal stimulus is starting to come to a natural end point and expiry. And we're saying without that, the economy is going to roll over and then stocks are going to struggle under that situation. So we're craving more stimulus, which is why this election is so important. Jackie, we're going to wrap it up here because it's been fascinating, fantastic talking about your process. I just want to give you a couple of minutes just to literally talk about the lessons that you offer, the courses that you guys offer, and the costs around the courses and any kind of special offers that you guys are running at the moment.
Cool, sounds good. So whoever wants to follow us, we have a YouTube channel. I think Chris mentioned in the beginning, you can type Money Tab, MONEY. I'm sure you guys know how to spell money. And TAB, Money Tab in Chinese is, I'm just going to speak Cantonese for a quick second. So it's called 我要做富翁. So Chris, you can type that in Chinese as well. So yeah, you guys can follow us on our YouTube, our Facebook page. And then I have a free webinar coming up in November 24th, if I'm not mistaken. So it'll be a free webinar. I'll be talking about my 15 years of trading experience, investing experience, and how do I come up with my valuation models and stuff like that. So if you're interested, there'll be links for you guys to sign up as well.
Sounds great. Well, thanks, Jackie. And if anyone's interested, as I say with all the other speakers, we'll be sending out a recording of this video with Jackie and myself speaking, and that will have some of the contact details there. So if you want to get in touch with Jackie directly, find out a bit more about what he does, and obviously the links there as well, please do. But I want to say thanks, Jackie, for obviously giving up your time today. You've been very valuable, and I hope I hope people out there have learned hopefully some lessons around how we're going to navigate this election and some of the different outcomes that Jackie's seeing. The guy's actually managed money in this situation as well. So thanks again, Jackie. You've been a superstar.
Thank you.
Pleasure.
Okay, see you.
Dan, hi. How you going?
Good. It's
good
early morning for us.
Yeah. Over in Vancouver. It's late here in Melbourne, and hopefully it's a good time for everyone who's watching this at home. Have you got your webcam on? I can't see, unfortunately.
My webcam is not on. Yeah, it is on.
It is on. Yep. I don't have the background, so really good to talk to you. Hope you've had it was 6:22 in the morning over there in Vancouver at the moment.
Yes, exactly. Yes.
Oh, crikey. Well, you probably look better than I do at 6:22 in the morning. So
appreciate that.
Testament there. I hope you've had a couple of coffees. But guys, just we'll start. Are you good to go, Dan?
Yes.
Perfect. So again, just want to go through the disclaimer. Anything we say today, should be considered general advice. Please don't take it as personal advice. Anything I say about the markets and direction or views around that do not represent my employer, who do not take a view on the market. If you could take a quick second to read the disclaimer, that would be perfect. But yeah, I want to introduce Dan Lok, because Dan Lok has a following on YouTube and social media of a small European country. So, you know, if you're not aware of Dan's work, do go and check him out on YouTube and various factors there. Dan Lok is a Chinese-Canadian serial entrepreneur. He's been through a number of businesses, which we'll talk about. And Dan takes this from a slightly different perspective from what some of the other guys do. And I think it's, you know, about diversification. You know, we've got various people who are on this program, on this summit, who represent, you know, very short-termism across multiple asset classes. Dan takes a slightly different approach. He's run a number of successful businesses, and as we'll probably talk about, some less successful businesses, and what he's learned and how we can sort of use that for lessons in our trading as well. Dan's got viewed by more than, I think, 1.7 billion people across his social network following. Is that right, Dan? It's 1.7 billion people
on cumulative total views. Yes.
Yeah. Okay. It's pretty crazy. Yeah, Dan's been featured on Fox Business, MSNBC, CBC, Forbes, etc. Controls a wealth brand under Dan Lok brand and some outside of the brand, which give him unparalleled insights into various company structures and allows him to be one of the top business consultants around. Dan, I've given you a bit of an introduction there. Just for people who aren't aware of your work, just talk us a little bit about your own background. You know, how you got into, you know, what to be where you are. You know, how you started accumulating businesses and getting the insights to running companies. Yeah, tell us about you know, from the early days to where you are right now. You know that journey across that way.
Absolutely. So, Chris, I came from very humble beginning. I was born in Hong Kong, and I immigrated to Vancouver, Canada, when I was 14 years old. And us, you know, just me and my mom. And shortly after that, when I was 16 years old, and my mom and dad got divorced. And as the only child in my family, unfortunately, my dad, because of some bad business decisions, he trusted a wrong business partner. So at the age of 17, when I was 17 years old, he went bankrupt. And he was the only source of income that we had, me and my mom. So my mom and I, we were living in a small 1-bedroom condo in Vancouver, kind of in the hood, not so good neighborhood. And that's when I realized, wow, like how important money is, because without that, I cannot provide for my family. And that's how I got into business. That's my motivation. And from there, so I started very early on as in high school, kind of like most entrepreneurial young kids, and I was mowing lawns and doing different type of like odd side hustles, now they call that, and jobs to make a living. And I realized that I couldn't really create wealth with a job. I need financial vehicles, I need business vehicles in order to do that. And from there, I started many businesses. I failed many businesses. In fact, that's public record. I started and failed 13 businesses, 13, Chris, 13, before having my first success. And early on, I was fortunate enough to find a mentor. His name is Alan, to guide me in business and marketing and sales and a lot of different these topics. And from there, I went online. It was in my early 20s. And because at the time, internet was booming. So timing is a factor as well. So we were doing very, very well. I was in e-commerce. I was in affiliate marketing early on when still ad cost was very, very low, right? It was not a whole lot of competition. Back then, when you're off the first page of Google, I mean, you could get a lot of customers, a lot of traffic. And fast forward from there, I've been doing now almost 15, 16 years, like so long. And now we have a portfolio of companies, different brands. We grow through acquisitions. We mainly focus in the e-learning space and also the SaaS space. That's where we are today. And of course, as a portfolio, now as an investor, then we invest in different types of asset class. I like businesses. I have some real estate, and also, but looking to transition more of my capital to the financial market as well, simply because how volatile that is.
I wanted to talk to you about that because you've just recently formed a partnership with one of one of the really fast-growing fintech companies.
Correct.
You've got into the education space.
Correct.
And I know the company myself. Very stringent on the risk, or very strong on the risk management side of things. So, talk to me a little bit about why you've invested in that space and what brought you more into the sort of financial education and a specific focus on risk management there.
I think first for financial education, I never thought that this is what I would do for a living, because in my whole career, as I said, even a young entrepreneur, I've been fascinated with like how wealth is created, right? How does someone become successful? How businesses are built? So that's always been my obsession of learning everything I could about finance and capital and entrepreneurship and sales and management and all these things. And I just found that I have a knack of simplifying very complicated concepts and teaching in a way that people would get it, right? And before you know it, then I've got students in over 151 countries, right? Just yesterday, I was doing training for a group of 150, 160 entrepreneurs, right? Pretty high level entrepreneurs, teaching them how to scale their companies using social media. So with my experience, so I made my first, you could say first bucket of money when I was in my late 20s. And because I was a pretty decent entrepreneur and I accumulated this little bit of capital, and I went to deploy that capital as an angel investor, right? So I was investing in different kind of ventures, a little bit of tech, a little bit of everything. So, but here's the problem, Chris. I didn't know what I was doing, right?
Yeah, well,
I was a good entrepreneur, but I wasn't a very good investor yet, right? I thought, oh, that person seems eager, or that seems like a good idea. Right? It seems like it, right? So I would put some seed capital and put into that, and then I hope that it would grow, right? So I invested in 10 different companies, 10 ventures. I lost money in all 10.
Right. Okay.
I lost money in all 10. So looking at that, I was like, okay, this is not good, right? Like, there's no way. How come my own company, I'm doing pretty good, but when I invest in other companies, they just so bad. Like, what don't I know? And that's when I learned about risk management. And you know what? It's not so much how much money I could make. It's more how do I protect my downside. Before I think about the upside, I think about my downside. So I came up with a whole number of ideas about, okay, how do I manage risk? So now everything I invest in, I want to have some kind of control, especially businesses, right? And there are a few types of control I'm looking for. Control of the key people that we hire, control of how money is allocated, how money is spent within the business, control of marketing, and control of strategies where the business is going. So now when I invest or acquire a company, I look for those type of things, right? I trust of course the management team, the leader, the GM, but I look at those type of things. So I have control over those things. Now it goes back to the financial market, because it's now with COVID-19, as I'm sure you alluded to that, a lot of the assets, especially real estate, they're not as liquid, right? And businesses are also not as liquid, right? Business like a marriage. When I buy a company, I mean, that's a marriage. I can't, like, it's not like a stock. I can just sell it tomorrow if I don't like it. So I have a lot of those type of assets, and with the current environment, how much uncertainty, election, all these things that's happening, right? Who knows what vaccine and COVID? I think allocating my capital into something that's more liquid, that makes sense. So that leads to, in order to do that with technology, because I'm in tech and digital marketing, I thought to myself, there has to be a way for me to manage my capital smarter and better. And that's when I invested in area to see, okay, machines, AI, all these things that are happening, I want those things to I want a better way, a more efficient, more systematic way to manage my capital, so to protect my downside. So that's basically how the whole thing came about.
Yeah. So our business that we've partnered with as well, I think is very strong on the risk management. And I think if you take the trading side of the risk management relative to the risk management that you have in your investments,
yes,
what I thought I was really interested there was the word and I picked out the word control.
Yes.
You know, you've got a process that you have, and as traders, the Aria teaches it. I try and teach it. It's about having a framework, a trading plan, a process that you go through meticulously. You don't take the right trades, or you take the right trades. If trades don't fit in within that filter, you don't take them, and you have the discipline to stick to that program. And obviously, there's other factors that are around that as well. But when you're making a business decision, because people must come up to you all the time and say, look, you know, Dan, we need $10 million. Can you help us out? I mean, there's a process, right, that you would have it, and that must be the same as in a kind of parallel capacity to trading.
Correct.
You know, your framework of picking the right businesses. You say that you lost money in 30 or 10 consecutive trades.
10 investments.
And so talk to me about your process now for if I come up to you and say, Dan, I've got $10 million. What's your process for thinking about that investment?
So how I lost money in those 10 ventures is because I was making decisions based on emotions, based on a gut feeling. Oh, I think this person is good. Oh, I think that's a great product. That's a great idea. Like, you know, we're excited and let's do this, right? Versus now we have very, very strict investment criteria. So example, when I look for companies now, one of the key things I look for, first of all, the industry that I invest in, it has to be growing. It has to be growing trend. Number one. Right. Number two, I only invest in companies that have recurring revenue. If they don't have, if it's transactional, I do not touch, right? Of course, now definitely it needs to have a scalable model, meaning that I could scale through with digital marketing, also a global audience. I do not invest in anything that only like serves a local audience, not a state, not even a country. I want to sell to the world, right? And then I only invest in businesses now I could scale with a remote team, right? And then numbers, of course, like we have different sizes. If it's a bolt-on, if it's a full acquisitions, and we have like different numbers, things like that. So we look for all those things, all the investment criteria that we have. So someone comes in and they say, pitch me a deal, and they say, oh, this is great. This is. I said, well, I'll just go through this list. Now, this is a very, very basic due diligence, but when we do like full due diligence, it's like a 30-page document. But the very basic, all these things, recurring revenue, trending, high profit margins, scale through social media, global audience, consistent growth for the 3 years, all these things, right? So I look for those. Anything that doesn't meet the criteria, I might love the CEO, the entrepreneur, I'm not going to invest. I love the guy that said, we'll be friends. We shake hands, it's good, right? But I just won't invest. You know, it doesn't matter how much I like you. It doesn't fit the investment criteria.
Yeah. Just talk to me about. I want to go into the into your wealth triangle. Have you got some slides, Dan, which you've brought around the wealth triangle, which you wanted to show off, or have you got anything that you wanted to detail around that?
Slide, but I can explain it to you. It's quite simple. So,
well, just before we go into that part, because I think that's a really key component, and we'll give it a fairly decent segment. We've got the election coming up, obviously, this part of the conversation, and for me as a trader, I want to know, do I want to be involved in the election? Do I want to have positions over there? How do I manage my risk? Do I want to be hedged? Do I want to be, just closing? Do I want to trade intraday into those positions? These are the sort of considerations that I've got to have as a trader. How great my exposure is, and I'll look at what the different permutations of outcomes could be from both sides of the camp, and be prepared to react to that. In your model, when you're choosing investment, when you're in the investment, how do you manage? Do you have a risk process that you focus? I know Aria does it very differently on the trading side, but you as an investor, what's your risk parameter?
Well, it's all different. So it depends on the asset class, right? If it's real estate, if it's business, if it's like now stock, of course, the financial market, it's all different. In terms of the election, of course, we're like only days away from the results, and no one knows which side is going to go. I don't think it's so much about the prediction of who's going to win or who's not going to win. I think as an investor, the way I looked at it is US, China, where the world is going. Simply because I serve a global audience, right? So I look at overall where the world is going and why, like Chris, I was sharing with you about the why only invest in companies that are recurring revenue only if they have a remote team. Example, let's say in US, let's say some big retailers, they're going bankrupt. That let's say if even I could buy the business for really like cheap on a huge discount, I will not touch those businesses simply because I don't think the retail business is going to be like it's going to be growing in the near future. So I look at all those type of things where knowing covert, even when we have vaccine, afterwards there may be some other things in the future. So I only want to touch industries that are recession proof and pandemic proof. When I say pandemic proof, I mean, one of the things I kind of tell a metaphor all the time is, you think about a bartending business, like a bar business, go to pub, right? You know, in good times, you know, you and I, we go have one drink. In bad times, we go have two drinks, right? So supposing a bar business, right, is recession proof because people want to hang out with friends, they go drink, it's fine. But then who knows? Something like this hits, is not pandemic proof because now suddenly they get locked down, closed down, and they can't open, or there's a capacity limit. All these things, all those industries where the world's going, I will not touch. Any industries that are heavily people heavy, I will not touch. So that's how I manage my risk.
It's a really interesting point though, right? Because if I think about one of the key sectors there, you talked about being recession proof, pandemic proof. One of the sectors that immediately jumps out is US tech, right?
Yeah.
But then I also think about another consideration, which must be something that you consider all the time, and is how these businesses are influenced by government. And when you've got something like Amazon, when you've got something like Microsoft to an extent, you know, some of these big tech names, big top five, the monopolistic qualities, you know, that doesn't stand great with the Bidens of this world. Certainly, maybe not so much Biden, but certainly Elizabeth Warren and you know, the hard left, you know, Bernie Sanders, for example. They want to end this kind of shareholder capitalism. And so when you're looking at a business, yeah, I like monopolistic qualities because it means that their earning potential is obviously very high.
Yes.
But there is also a trigger point that where you have to think about the risk premium in those businesses, because what happens, governments generally don't like businesses that are, you know, that have these price making facilities, and that's obviously the concern we're there. So yeah, talk to me about US tech. You know, do you hold any US tech, and if so, are you concerned about change of government given the pricing power that these guys hold?
Well, to me, in my mind, when you get to like that stage, like a Facebook or like, you know, something that big, right? You will on the TikTok incident and all that, of course, government. I think because I'm in tech, that in my mind, the government is still trying to figure out how do you deal with these things, right?
Yeah.
Because the power comes from the data. That's what they're concerned about. Right? It's not really the business model or anything like this. The data, wow, they know a lot about our people, right? That's the biggest concern. And that, I mean, I talk about, you know, data is the new gold, right?
It is absolutely 100%. Yeah.
It is new gold. So depends on the business model. Like some of the business models, if that's your data driven, and you are planning to have put it this way. Let's say if I have a software, right? If I sell to consumers, example, let's say I have a dating software, a platform like eHarmony, something like that. I have tens of millions of people on my platform, and I know their profile and all that. Well, government will be like, this is a little bit risky, right? This company holds a lot of data about our people. Versus if I am in a software where it's selling to B2B, like a business owner, something like a CRM or something like that, and I serve a much smaller crowd, 10, 15, 20,000 businesses, but then at a way higher price point, they will look at it differently. They're not as concerned you're serving some businesses. You know what I mean? So it depends if it's B2C. If you plan to scale to like hundreds of millions of people, it's a different story. But I actually like to stay in the B2B sector. That's why.
Right.
Myself. Yeah.
Well, let's go back into the product that you're known for, and that is the the wealth triangle. So why don't you explain a little bit about what the wealth triangle is and
Yeah, so
how people can use it?
Yeah, so I pioneered the whole concept in terms of wealth creation, because so many people ask me, well, then what should I do, right? In my scenario, what should I invest in? What should I focus on? And I just found that I'm giving the same advice again and again and again. What has worked for me, that I can only speak from experience, but this is what has worked for me. And after I developed this concept, it's a very simple concept. Once I explain it, everyone would get it like instantly. But this is why it's profound. So usually the profound concept is very simple. And I realized a lot of the wealthy people that I know of, that I have had the privilege to be in contact with, that's kind of what they follow. So very simple. In terms of wealth triangle, there are 3 different components, okay? The first component is what I call high income skills. High income skills. And I define high income skills as a skill set that you could potentially make $10,000 or more per month with, basically $120,000 a year or more. Now, this is not a high income job. This is not a high income profession. There are 3 different things. So in terms of high income job, let's say you work for corporate, you're making 10,000 a month, or that's a high income job. It is company corporation dependent. That means when you leave the company, you may not get the same pay, right? And then you have high income profession, such as, let's say you are a real estate agent, right? You are a high paying one, you earn very good money, that's great. But when you change industries, example, you're no longer a real estate agent, you don't get that income anymore, you're starting from scratch, that's a high income profession. A dentist, a lawyer is high income profession, okay? High income skill, on the other hand, is not profession dependent, it's not company dependent, it's not industry dependent. What it is skill dependent, meaning that I could take my skill and it is transferable to different industries, and I can work and move, and I'm flexible. I can work with different countries as well. So it's a big difference. You see how it's like, it's more relevant conversation when it comes to how we're transitioning, what I call it, from the job economy to the skill economy. So that's high income skill.
So you're talking about things like having a quantifiable mind, you know, you're a numbers guy, or soft skills, you know, the ability to build relationships and be able to use that. I mean, I don't think I've got a strong belief that schools don't focus on teaching kids soft skills, because if you can build relationships and networks within the employment and within your clients, I think that can be a very, very powerful situation. It's more about the education. So I think when you're talking about that, it's soft skills and the ability to be liked, I suppose, and build networks, I think is very powerful, right?
And I believe it's no longer job that pays the bills, it's the skill that pays the bills, right? We need to be able to be nimble and develop that skill set. And the good thing about when it's a high income job, how much you get paid is dictated by the company, by your supervisor, by your manager. They are saying that, hey, you want a 3% increase in your pay? Well, let's sit down and talk, right? But however, with a high income skill, the only thing that dictates how much you get paid is the marketplace. So example, let's say if I have digital marketing skill, I can run traffic for companies. I could be making 10,000 this month. I could be making $15,000 next month. The only difference is, am I able to find those customers who are willing to pay me the extra or the premium? Am I able to deliver extra value to the marketplace in exchange of the money? So with high income skills, you are still trading hours for dollars, but you're trading hours for high dollars. Why is that so critical? Because that gives you more capital to put into investments, right? So what I don't believe in is when you, let's say, have a job, a low income job, making whatever, $30,000, $40,000, $50,000 a year. And you know how people, they have a little bit of money and then put into any kind of investments, anything that they don't understand, right? Oh, my friend told me about this stock tip, let me go into that. My friend told me about this cryptocurrency, let me get into that, right? And that's how they lose their shirts. So that's high income skill, right? And then you have what I call scalable business as the second piece. So the scalable business, meaning a business that you could scale quickly without a whole lot of infrastructure or very labor intensive, i.e. an e-com business, i.e. a software business, a retail business, a restaurant would not fall under the category of scalable business. So that's the second part. And then the third component is high return investments. And I define high return investments as investments that would give you return on an annual basis 10% or more year in and year out. So this is why it's so critical. So let's say someone comes into me and say, hey, Dan, you know, what should I do? I have a job. I'm making a little bit of money, 50, 60K a year. What do I need to do? What do I say? Focus on the high income skills. So as you earn more, you have more capital to deploy to high return investments. Got it. Okay. Hey, Dan, I have a high income skill now, right? I'm a consultant. Let's say I'm making decent amount of money, 150K a year. What could I do? Well, you could then consider taking your skill set, start that scalable business, because the high income skills provides you with income. Income is king. We cannot create wealth without income, right?
Yeah.
And then you can put into high return investments that provides you with cash flow, and then the high return investment is what builds your net worth. So that's my formula.
So you look at the mindset of people, and within this situation, you talk about the skill sets and various factors. As someone who's been very much in the investment space, but now you're making this sort of transition into the short-term trading space of Aria. In your experience of moving into this space, what have you learned? What have you sort of taken out in terms of the mindset of the trader? What do you think makes a good trader? What sort of skills do they need to be able to display? You know, lack of ego, for example. You know, what have you learned along in your journey so far? What sort of characteristics and traits you think will make a successful trader?
It's fascinating because I see so many things in common from a trader versus also an entrepreneur. I think there's a lot of similarities, right? Sometimes entrepreneurs, they are very emotionally attached to business. Same thing, traders are emotionally attached to investments, right? The psychology of investing, it's actually very similar to the psychology of entrepreneurship. Oh, I think about it. You're buying a stock, you're not buying a stock, you're buying a company, right? It's the same thing. It's entrepreneurs that are running those companies. So it's actually very easy for me to see the patterns, and like I look at that, I'm like, yeah, I'm not thinking of buying a stock. Even if you're thinking about short term, you just want to make money on the difference, that's a different story, because you can invest short term and long term. But if you're thinking about long term, I'm not buying a stock, I'm buying I would imagine I'm actually buying, would I buy this company? Would I actually acquire it? Does it make sense? What about the customer base? So I kind of look at those type of things. But like you said, for the traders, I feel very, very similar. I think criteria, manage your own emotions. Risk management, I think we've talked about that. And I think sticking with what you know, right? Because in the financial market, there's are you making money with forex trading? Are you making money with stocks? Are you making with like different industries? Knowing those industries and doing our research and using automation, using tool like Aria, those type of things, I think is very, very powerful, right? The old days, it's like now running an online business without using software. Who wouldn't use? Like, we use over 100 software running our companies, right? So it's a no-brainer for me.
So it's interesting because you've learned a lot. You now teach a lot of people on the entrepreneurship using your wealth triangle, and you talk people about business. But you're getting more into the trading side of things. So where do you learn? A lot of people who are watching this webinar will be sitting there saying, they're either intermediate traders. Some of them will be in the market for a while, but there's going to be some fairly green traders out there. And you're going through this same process. You have this fundamental background for the ability to learn and understand how to pick these things up very quickly. But where are you learning? How are you becoming a better trader?
Yeah, so that's why I think one of the things that we very much focus on with Aria, it's not just giving you the tool, but also providing the education, taking the trading plans and experience from these top traders, what they do, combined with tech, and then teach all the other traders how to do it. Because I always believe your income can only grow to the extent that you do, right? And your wealth can only grow as fast as you do. So the more you learn, I mean, the more you earn. So not just like, think about here's a piece of software. That's a phenomenal, spectacular. It's like you have a Ferrari, right? It's great, it's a Ferrari. I always describe like Ferrari is like a Ferrari. But how do you drive the Ferrari, right? How do I shift the gear? How do I turn on all these features and within the car? I think knowing and seeing what other successful and experienced traders do and learning from them and understanding their psychology, not just what they do, but how they think. I think how they think is the most critical. So that's the same thing in businesses. Like the reason I think I'm able to accomplish the success that I have at a relatively young age, because I've always found people who are way smarter than me, and I'm a very good student, and I learn from them, and I study them, I model after them. And the same thing in trading. I think learning from other successful traders combined with technology, and that's how you get going. Of course, we would make mistakes, right? You learn from mistakes, and you learn from your own, right? Your own errors, and from there, hopefully, with IRA, you can minimize that. But we'll all learn from our mistakes for sure.
There's this whole wave of new traders who are coming into the market, right? You know, you hear about them all the time, the Robin Hooders and whatnot in America. How do you feel about the new wave of traders looking to jump into the market at the moment? How does that? Do you think it's getting a bit too speculative, a bit frothy, or?
Yes.
How does that make you? You know, do you think there are risks around that? What's it psychologically? How does that make you feel?
I think people go into trading if they go into it like some, like, is it a get rich quick kind of thing, or is it like make a quick buck? I mean, those investors, I mean, they're gonna go through some school of hard knocks, right? Versus if they go into it more long term. This is why I teach a wealth triangle, right? I believe you're trading, you're getting good return from your money. It builds your long-term wealth. But in the same time, you should work on your earning capabilities, so you're earning more money every single year, right? If, like, in my mind, if you're not increasing your earning ability 10-20% a year every year, then we're not growing, right? Like nowadays with inflation, everything else, like, oh, 2%, 3%, like, bump in my salary, that is not enough. Like, Chris, you understand that, right? That's like, that doesn't get you anywhere. We need to be multiplying our income quite drastically, 10-20%, like 20% a year minimum, very minimum, right? Then from there, you have more capital to invest. Because if you only got so much capital, that is limited by how much like why we need to hit it out of the park. Oh, I want to make this trade and I want this to return, 50%. Well, that's pretty crazy. But you say, well, you know what? I'm making more money. I'm putting the trade. It's more long term, right? Of course, you can do in and out. You can buy and sell. You can do that, but it's really a long term thing. And you're not spending all day in front of a computer screen, which I don't believe that either, right? That's why I want to use automation and tech, right? I don't want to be the trader that's like 10 hours or that. You know what? I've got a life. I've got my wife. I've got my business to run. I want my money to be secure and growing in a steady pace that I can spend 30 minutes a day, something like that, maybe an hour, right? If I want to, but 30 minutes a day using automation, boom, I do that while I'm doing everything else. That's just my perspective. Because I'm a businessman first. I am not a 3 computer screen like with 2 keyboards going on. That's not me, right? So that's my take.
No, I mean, I think it's interesting now. If you look at Pepperstone as a business, we're about 45% of our daily flow comes from automated trading, from people using expert advisors, algorithms in some capacity. Exactly. So it's definitely a growing part of the business, and I think part of that major reason is because people struggle with the emotional side of trading. They make rash decisions. When I look at the US election, people are going to see these different states coming out, Florida, Pennsylvania, Arizona, whatever it's going to be. Yes. And, the professionals know what that means for the election outcome. They see a high probability if Trump can get Florida, he gets a slightly higher probability. If he can get Pennsylvania, then he's really in the race, when he's obviously there's no expectations. If Biden gets Florida, then he's pretty much done, right? He's home. You're going to get 20 odd electoral college seats, and I think he needs to win a few more. But he'll get all the 2016 seats that Hillary won. But so we'll be looking at that, and the ability to manage noise and emotion and see big moves and go, well, I'm going to take off that position, and then they look around and that position's kept going. The ability for an algo to effectively not be taken in with that news and the emotion and just do what it's told effectively makes it very attractive for people who struggle with the emotional side of trading. So I think as things go, the automated trading is going to get a bigger situation, and I think artificial intelligence is going to become bigger. The kids these days, they're getting taught how to code at school at the age of 7 years old. So I think this is going to become way more prevalent. The idea of using like an artificial intelligence algo to recognize news and sentiment feed and take that into positions is good. Before I leave you, Dan, because it's been some really good lessons, and we've only got half an hour. We could spend ages, and it's a nice little tidbit to sort of, if people have found this really interesting, to go onto your YouTube channel and some of your other social situations, or check out Aria and see what those guys are doing there with the risk management and their different strategies. Before, if people are interested, go in and check out those, some of your life lessons and various factors there in the wealth triangle. The election itself, I know you're not a political guy like myself. You have a view. Do you think it's going to be a volatility event? Do you think it's going to be just like one of those kind of Y2K moments where it doesn't prove to be too much? Of course, it has big political ramifications, but for the markets itself, do you think this is going to be a Y2K moment, or do you think, from where you sit, this could be a volatility event?
I think definitely very volatile. And after the election, also, just from my perspective, U.S. has a lot of fundamental issues they got to solve. When you have the healthcare crisis, and from the research that myself I've done with my advisors, I believe, this is just again one man's opinion, right? The crisis has yet to come. I think the financial crisis in the U.S., because to me we're still in a health crisis. The financial crisis would follow the health crisis. I think after December, just because I'm in that space, after December, a lot of businesses you'll see in the U.S., a lot of retailers, they're doing the final push for Christmas, right? To sell the inventory, get rid of that. I think you see in the next wave of layoffs, unemployment coming in January, because after December they go bankrupt.
Which is why we need the fiscal stimulus, right? So this is what a lot of people in my world are talking about. Is they call it this, that we're starting to get into the early parts of the major insolvency phase of this. So businesses, really struggling, which comes to your point of looking at businesses with cash flow and recession-proof businesses with cash flow. So I think there's a lot of people who do say that we are now going into the solvency stage, and that's going to have, as the tide goes out, if we don't get fiscal, that's going to see economics really deteriorate, and markets therefore are going to become more volatile going forward. I'm sympathetic to that, but which is why I think we probably will get a fiscal stimulus if things look vulnerable, regardless of what Congress looks like in bits and pieces. But you think this is going to be a volatility event in the short term, but also longer term, you think that the markets are going to be more volatile than they've been, or sort of similar sort of what we could have
more volatile, just because there's so much, it's just too everybody is speculating, right? When is it going to be, like, it's just like, it's very simple. Think about if there's a second wave of the whole virus that comes back, and you can see the spikes in US and all those, right? Like, it doesn't take a whole lot to cause a huge drastic impact in everything else, right? You open a business, and you close the business. You open a business, close the business, right? Like all these things, and it affects all these other countries. And I'm more pessimistic, right? I take a more negative view, that I'm not so, vaccine comes and all that. No, I really believe for the mask thing, we'll be wearing that for a long time. That's just me.
So do I. Yeah, I think.
Right. I think it will. In fact, I think it will actually become part of our life. Right.
No, I do.
Yeah, because I look back back then in SARS, when that happens in Hong Kong, because I'm from Hong Kong, right? So even after SARS was over for so many years, people still wear masks in Hong Kong for like many years. And now, of course, everybody wears masks. So I could see that now around the world. That just becomes a thing, like the whole social distancing and all that, right? Of course, once we have the vaccine, but again, the vaccine, we know, like this is not a medical discussion, right? But what about what about mutation? What about how do we make sure we get enough vaccine to enough people? The billions of people on planet. Do they pay for it? Did not pay for it? I mean, there's so many questions in the air. We're dealing with this while U.S. is dealing with the debt crisis, with all these other crises that they're dealing with. They have a lot of things they got to deal with. Job crisis, but also in terms of doing all of that, and then you have technology disruption. How can that not be volatile, right? That's my take.
Yeah, well, Dan, it's been great to speak to you. If you want to say a few words about how about getting in touch with you or getting in touch with Aria or anything like that, if people want to hear more about what you do or Aria, what's the best way to get in touch there?
Yeah, so for me, it's very simple. You could go to my website directly, danlok.com, DANLOK.com. That's kind of the hub. We have I have podcasts. I have my YouTube channel. In fact, podcast, my Dan Lok Show, I interview thought leaders, business leaders every single week on my show, just asking them about, hey, what they think about what the world's going. I think that would give you a very good perspective. All that content is all free anyway. Right? I just share that with the world. With Aria, if you are looking to get weekly analysis, Aria signals, and also education, all these things that we talked about, and also trading plans from top traders, you can go to tradewitharia.com, TRADE, with aria.com, and you can download the app for free. There's no charge. Just experiment with it and see how that would help you in your trading career. It doesn't matter if you're doing part-time or full-time as well. So tradewitharia.com. Yeah,
well, we'll as I said, we'll send out the recording to this to people who've watched, and obviously anyone who's registered for the event. Getting in touch with Dan and also Aria as well with a promotion, I think, was going to be attached to that one as well. So Dan, great to talk. Could spend a bit more time, obviously, but obviously it's getting late. Getting it's early your doors, but it's been great to speak, and really appreciate you giving up your time to speak to speak to everyone here today, including myself. And we really appreciate your time. So thanks very much.
No, Chris, I appreciate you. Thank you very much.
My pleasure. Take care, buddy.
Bye-bye.